That is AIG Uche Henry Ifeanyi. Please, let's celebrate him. Thank you very much, sir. He is a criminal intelligence and forensic investigation specialist. I think we would like to hear such big titles now in the Nigerian police. Aside from that, he has a PhD and he has experience in cyber crime, digital forensics, financial crime, corporate fraud, and money laundering, with notable success in fighting crime and money laundering syndicates. He's currently an Assistant Inspector General of Police in charge of training and development, and is the chairman of Interpol Africa Working Group on Cyber Crime, which means he heads about 54 nations in Africa in managing financial crime. He became an AIG in March 2026, and prior to this time, he was a director of the Police Force National Cybercrime Center since the year 2022. Please, let's celebrate him once again. And shortly, I would invite him here. I think another thing that you should know, like I said, is that he has a PhD. And I would like to add to it, he has a very active LinkedIn profile. So if you think police officers are not on LinkedIn, he has debunked that. Please, let's celebrate him once again. Like I said, he will be leading us in the discussions in a bit, and the theme of what he will be discussing, leading us into, like I said, is the trust frontiers that we are in today, and he will be telling us about trust, enforcement, and the cost of financial crime. So let me welcome you to the podium while you give your keynote on these insightful topics. Please, let's celebrate him as he comes forward. We can do better. We can do better. Thank you. You can see that he's a 21st century compliant police officer. He's not carrying files, he's carrying a tab.
Thank you, MC. Good morning, everyone. Let me start. First of all, I want to thank the organizers for inviting me. I am so happy to be here to discuss issues concerning trust, enforcement, and the cost of financial crime in our society, which you will agree with me that is a big issue. That contemporary society like Nigeria, looking at Africa and the world all over, is a matter, an issue that is being discussed all over the world. Well, you can imagine if you wake up in the morning, of course, naturally when you wake up in the morning, first thing you do, before you do or before you eat, is to pick up a device. So that good, because there is no one that is here that does not have a device. What I mean by that, they have your phone. And the first thing you do is to check your messages. And you can imagine when you check your messages and you discover an alert. That's a transaction that you discover that threat actors have been able to create an account and your money wiped. The question will be, are you going to hold your financial institution responsible for the attack? Issue that we're discussing, we're going to discuss further, is the issue of trust. Or are you going to report to law enforcement agencies? Do you have trust that your law enforcement actually have? Or will you resort to self-help when you have an attack? It is imagine a situation where you're going to face with all that you have, that money you deposited on trust to a financial institution. Because for you to approach a bank to deposit your money, it's believed that you have trust, right? And because you have trust, you believe that nothing can happen to you. Well, it becomes a big issue when at the end of the day, money is being wiped. I look at this trust as a hidden tax. When we talk about hidden tax, it's something that all of us suffer from. I ask the question, who bears the cost of the financial cost of the money that is being hacked? I know that we all be pondering over this. How do we handle this big issue? As I said earlier, trust is the big question. And trust is the currency behind every economy. We have a problem to solve. In our society, where you have insider trust, banks, financial institutions, providers, that provides platform for SIM swap to enable threat actors to move your funds. It's a big issue when you look at our institutions like the banks, where we notice or we will see ATM card swaps in the environment of our banking industry. Who do you hold responsible? Is it the banks, the financial institutions, or the victim, or the law enforcement? Who do you trust? That is the big question. Out money. And these are custodians of our money. I can tell you clearly that there is a solution to this problem. And the solution is why we are here. The solution is for us to look inward for how to acquire AI powered solutions that can actually change the narrative. Because whether you like it or not, that is the trending issue. And that is the only way we can handle issues concerning fraudulent transactions, fraudulent activities in our banking sectors, in our financial institutions. Money moves on systems, as we know, but systems moves on trust. The big issue is the trust. Who do we trust? Has stopped working in our jurisdiction because no one trusts the system. How do you function? We now look at how it affects our economy, how it affects our daily activities, how it affects our daily transactions. It is a big issue. That is the true cost of said earlier that the best way to go now is to acquire AI powered solutions that can actually help us to detect abnormalities. Why this conversation matters? It matters because financial crime has changed. You can imagine before now, what we used to have are armed robbers invading banks with guns and all manner of instruments of violent use. Can you please play this clip? So that's what we notice in our society. But I can tell you clearly that the trend is no longer the same today. The trend has changed. Armed robbers no longer carry weapons. Armed robbers no longer carry instruments of violent use. Armed robbers goes with systems. They carry laptops and they carry phones. That is the new trend. And how do you trust? How do you trust your system? How do you trust your institutional portals? How do you monitor fraudulent activities in your portals? Yes, we can provide the best solutions. We can have the likes of honeypots. We can have the best antiviruses and all manner of...
The CBN baseline has changed.
So if you can't play it, let's move on, please. I don't think there's time for that, but I would have loved us to play that clip. So how do you manage some of these things when you have an issue with trust? So I'd really like to share this story. We investigated a case where we had one guy called Ifeanyi, but not my own Ifeanyi anyway. The guy moved to Lagos to meet one of his friends. His friend acquired lots of properties, living big. So he was thinking...
This is the ring! Hands up now!
Please, don't hurt us.
The money in the bag. Let's go. Move! Go, go, go! Everyone in drive! Floor it!
So, few years back, like 10 years ago, this was the trend that we had in Nigeria. Can you play this clip? The next one. So this is what we have now that is trending in our society. Armed robbers no longer carry weapons. Armed robbers no longer go, carry instruments of violent use. As I said earlier, they go with laptops, the phones, the smartphones, and all that you have. That is the new trend, and that is the new...
A few moments later.
We made it! Spray money!
They celebrate.
Woo! Keep it coming down!
All right, thank you very much. So, can I ask a question? When, from January to the banks, if you know any, can you tell me, please? So no robbery incidents, armed robbery incidents in our banks. January till now. How about 2025? Which bank was robbed using weapon? None. How about 2024? Any that you can remember? So you will agree with me that the trend is no longer the same. So, threat actors move with the speed of light, but law enforcement and practitioners, they move with the speed of the law. Bureaucratic bottlenecks. And that is what it's affecting us today. I thank God and thank the organizers for inviting me for this discourse, because it's been a big issue concerning affecting all of us here. Because as I said, the issue is the hidden tax. Who pays the hidden tax? If an account is being wiped and money moved from accounts, who pays the hidden tax? And I told us here, what I refer as the hidden tax are those costs of compliances, the cost of the security, the cost of the acquisition of the AI that we're talking about. That is the hidden tax. And of course, as I said, it is a big issue. Now, unlike traditional financial crimes such as physical robbery that we've seen, counterfeit currencies, cash smuggling, fraudulent documentations, we are now dealing with. The new thing that we're dealing with is AI-powered fraud. So because I talked about AI, acquisition of AI platforms that can actually help us to fight this scourge. Because you can only use tech to fight crimes that have been generated with the use of tech. It's no longer, I told someone one day, when we were discussing and people were like talking about normal fiscal security and other things. And I was telling them that these are old trends. Nobody's talking about normal fiscal security. Yes, you need to secure your banks, financial institutions with armed personnel. But a mobile policeman that is seated in front of a banking industry, how will he identify when an attack is being carried out? So what we have now is AI-powered fraud. We have the likes of deepfakes. We have the insider threats that I talked about. We have crypto laundering, and we have ransomware attack, and we have organized crime. And I can tell you clearly that ransomware attack is gaining prominence in Nigeria. A lot of financial institutions are facing this currently as we speak. That is the new trend. People are now encrypting, data demanding for ransom. How do you identify issues concerning ransomware attacks? Before now, we're having issues like trends like romance scam, sextortions, business email compromise. But recently, from last year, we discovered that the tide is changing. The cyber criminals we have in Nigeria, financial fraud actors we have in Nigeria are getting more vicious. If we are getting more vicious, we need to get more sophisticated, with devices, with AI-powered solutions that can actually help us. So it is a big issue that we are facing. Now, this is actually what defines our reality as we speak. We have the likes of speed, bottleneck response, scale, and borderless crime. Financial crime is committed today with the speed of light at an astronomical scale without bureaucracies, and victims are not limited by borders. Whereas our reality is that law enforcement response is slow, riddled with bureaucratic bottlenecks and international engagements. I remember when I was growing up, then our parents would go to bank, queue up, and collect tally. Who noticed that? All of you are very young. So that is what was trending. They go to banks, they'll queue up, get a tally. Now move to their offices, maybe around 12 lunchtime, they go back to the bank to collect their money. That was the trend then. It started moving to when we have like 2 days. If you order for transfer, it takes 1 or 2 days. They say, oh, it's going to take 24 hours. It's going to take 48 hours. But I can tell you, the story is no longer the same. Here now, you can transact, send over 2 million, 10 million within seconds. How do you identify frauds that are associated with that? The solution is for us to embrace artificial intelligence platforms that can actually help us. We're talking about bottlenecks. The threat actors, they have very good coordination all over the world. They have very good, I'll use the word, understanding of how to deal with us. But for us, before you write PND an account in Nigeria, you have to go to court, obtain banker's order. As law enforcement, you cannot call a bank and say, oh, close this account, it's a suspicious transaction going on. They won't even talk to you. So you need to go to court, get a banker's order, then go now write to the bank. Bank will verify, send the banker's order back to the court to verify whether that banker's order is real or fake. Within all these processes, it takes minimum of 2-3 weeks before you can PND an account. That is a big issue. How can you trust our judiciary? How can you trust the banks? Meanwhile, there's an insider threat actor that will lift the PND for the threat actors to move out the money. It's a borderless crime. And of course, scale is equally a big issue. Now today's criminal enterprise operates like a multinational technology company. They have everything that you have, the tech companies. They set up, one suspect we arrested from Agbo. We had an intel, the last operation I had before I left the National Cybercrime Center. Fortunately, Bashir here, can you stand up, was the one that led the operation. When we were contacted by National Crime Agency, and they told us about a fraud center in Agbo, and they were able to actually give us the exact coordinate that led us to the threat actor's residence. And so what they do, if they are set up, they have everything that you have in your tech company. They have your systems, they have their phones, they have their routers, they have, what is it called? This Elon Musk's Starlink, they have Starlink. So they have everything set up. And the NCA asked, is it possible to bust this gang within 1 month? And I told them, let me have the information that is available. They provided the information as available, and I told them that we're going to crack this case within 48 hours. They said it's not possible. I told them that if I have the logistics, I'm going to crack this case within 48 hours. They were able to provide the logistics. I sent my undercover team that moved to Agbo that day. Within 24 hours, I was able to forward the video of the premises. And within 48 hours, we were able to arrest the 6 threat actors. Now, the question is it the only company, the threat actor company that operates that way in Nigeria? No. We have a lot in Lagos. We've got to have busted a lot in Lagos. So they set up the way you set up. They conduct vulnerability assessment and penetration testing. They conduct all those vulnerability assessments. They use their exploits to find out those vulnerabilities. And of course, when they identify vulnerabilities, what they do is to strike straight ahead. And they go in, change activate the e-payment portal, move whatever amount of money that they want. Let me ask you, when they move out billions of naira from the banks, who bears the brunt? Who suffers for it? Is it the bank? Is it the victim? Or who? Have you asked a question of all the alerts of charges, 1,600 that you receive on daily basis? What is it meant for? Is it just normal services? So what happens to the money that was removed? And the banks will still be functioning as nothing happened. is a big question that we need to answer. These criminals innovate, they outsource, they recruit experts just like you. They collaborate internationally. And of course, they do things together. Trust is invisible, yet every financial transaction depends upon trust. Without trust, economy slows, investment disappears, innovation suffers, financial inclusion declines. I ask the question, who bears the brunt at the end of the day? If I ask you now, do you trust your bank or your financial institution? I know some of us will say yes. A lot of us will say no. Now, you believe that you don't trust your bank, but why do you take your money to bank? The issue is that yes, we trust our financial institutions. Can I ask you a question? Do you trust Nigerian police force? Big question, right? Now, let me ask you another question. Why is it that if you have issues, you still go to police? So you trust the police. That's the meaning, right? You do. You do. But if you know when you say I believe, it's based on certainty, right? But when you say trust, it looks absolute, right? So the issue is that for you to have an attack, and at the end of the day, you go to the law enforcement, you go to EFCC, and you report your case, you report to National Cybercrime Center, you report to relevant authorities, it means that you have trust. And I can tell you clearly that in Nigeria, we've done a lot to help victims. And of course, the stories are there. But we're in a society where majority of our population, the youngsters, believe that the only way to be successful is to go into fraud. And this is an issue that not only all of us here or handle, that's an issue that everybody, all hands need to be on deck. You know, I keep saying it. In the next 5, 6, 7, 10 years to come, we're going to have issues in this country if we don't wake up to our responsibilities. Cybercrime and financial fraud is going to be worse than terrorism in the next 5, 10 years. Mark my word, if nothing drastic is being done about it. It's going to be worse than banditry. It's going to be worse than all the crimes that we have now. Know why? Because, I mean, the solutions are there. The technology that you use, that's the technology that the threat actors are using. And the youngsters now, they see it as normal trend. You know, in my place, they say, Adhere Baro, Oburu Omenana. You know, if things that are going on in society is left unchecked, within few years, people will believe that it's a normal culture. That is exactly what is going on. So we really need to do a lot. We really need to help our society. We really need to trust the government. We really need to trust law enforcement. We really need to trust our financial institutions. Can I tell you what? Do you know that our ATM card is the safest card in the world? There has not been any successful hack. What they do is the use of social engineering, of course, to manipulate victims to get their confidential information. And that is the only way you can infiltrate an ATM card in Nigeria. So you have to trust our system. We have to trust our institutions. We have to trust the police, because that is why we're here facing you, discussing this. So financial crime costs much more than money. It impacts reputation, confidence, jobs, investment, national security, and of course social stability. One fraudulent transaction may finance terrorism, human trafficking, drug trafficking, cyber attacks. You know that most times when you see these kidnappers, when they make money, they go on and acquire more weapons, right? And of course, in the digital world, the cyber criminals and the financial fraud, practitioners, let me use the word, once they make money, they go on and acquire the solutions, more sophisticated solutions that you have. So financial crime has become a global supply chain, and it's a big issue, as I said. Financial crime is no longer a banking problem. It is an economic problem. It is a governance problem. It is a security problem. It's a societal problem. So it's not about the financial institutions alone. It's not about the law enforcement. It's about our society and our well-being. These are compelling reasons why we should have this conversation today. So again, kudos to the organizers of this particular forum. So our expectation, we have seen the challenge before us. The critical question as we engage today is, how can we build trust in the financial ecosystem and minimize fraud incidences with its attending consequences? Trust cannot be legislated into existence, you know that. It must be earned through transparency, accountability, fairness, effective regulations, efficient dispute resolutions, and of course, consistent enforcement. We all are stakeholders in ensuring this, as I said before, achieving, and this is the reason this forum was organized. Every successful enforcement and prosecution reinforces public confidence. Every unresolved fraud weakens it. Last year, we were able to convict over 92 cyber criminals in Nigeria. It was a huge success. We recovered over 5-point-something billion naira for victims. 2024, we were able to recover over 8-point-something billion for victims. Yes, there is need for you to trust the police. Let us therefore interrogate our systems as stakeholders, exchange brilliant ideas that will guarantee citizens and investors confidence in our financial ecosystem. I wish you all a fruitful deliberation. Thank you all. Thank you for the right attention.
Before you go, just stay by. Yes. Thank you very much, sir, for this session. We'll come back to do a short wrap-up on it. At this time, I want to invite Bemi Sola, Oshunride, and Daniel Obot to please come forward to have a picture with him first before we proceed to the next thing. As they are coming, I would like to let you know that it seems like I was a little scared about the presence of the AIG. That was why I put the opening remarks before, I put the keynote before the opening remarks. But immediately after this, please, let's have Bemi, please. I think she's still outside. All right. So once she comes now, we would have this picture. Then we'll now take the opening remarks, because I think part of what this session has done is that it has opened our minds, right, to what financial crime is, how to ensure that we trust the system enough, both from the financial industry and the costs. The one that was much more daring is that in the next 10 years, if we don't do anything, it will become a scourge. And people will think everything is right about financial crime. Please, has somebody helped to get her? All right, thank you. I'm sure that she will tell us much more about why we are here today discussing the trust frontiers again. And this is powered like the language you use. Okay. All right. Okay, she's here too. All right. No, please stay. You can stay. Let her join you. And she can stay. Go in between the two men. Go in between the two men. Yes. Thank you so much, sirs. Thank you, everyone. Yes, like I mentioned, the keynote had come, and the keynote seems to leave many, many unanswered questions. And these would be resolved by the remarks from the group managing director of Smart Comply, in person of Bemisola Oshoride. Please, let's celebrate her as she comes. I'm sure that the AIG wants to listen to her too, because it will be like the opener to every other thing that he had left unsaid. Thank you.
Good morning, everyone, our distinguished guests, our partners, colleagues, friends. Thank you very much for being here. Our MC decided to to go faster than the observed protocol, but don't worry, we'll permit you today. So without further ado, we'll just start with the opening speech for today. Sorry. What's going on? I wanted to crack a joke. So I think let's use the financial space where we are complying to the new baseline standard now. The flow was supposed to be opening remarks, national anthem, then our keynote speaker, but we decided to twist it the other way around. Actually, our MC trying to make sure that we keep to time, since we started a bit late because of the rainfall and the orders that we have. So without further ado, and not to waste our time, I would like to start by honoring our special guests that we have in our midst, and also establishing the protocol for this morning, where I'll start with, I would like to extend our deepest respect and welcome to the leadership from the Nigerian Police Force, and also from the Economic and Financial Crime Commission, standing on the front line of our nation's security and financial crime and integrity. Our senior and esteemed senior regulators that are being represented here, covering the CBN, covering the NFIU, our SEC, Security and Exchange Commission, and of course the Nigerian Deposit Insurance Corporation, NDIC. Our co-host and partner, Tech Cabal, Insight, our strategic partners, and of course the head and executives of our key institutions that are in the professional space, and also in the association that we relate with. And of course, to every group managing director, chief compliance officer, chief risk officer, and technology leaders that are here today for this event. I'd like to say a big welcome and thank you for being here. Gathering us here in this room today is not easy, especially on a working Friday morning. And I know we all have our busy schedules that we are working with, but we've made time to come here today, and I sincerely appreciate the gesture of us being here, and it also shows how important the matter we've come to discuss is to all of us here. So thank you once again, everyone. going to our theme for today, the trust frontier. The word trust may be very small, but at the same time, it's the bedrock of where all our financial ecosystem is built on. And the thing about it is that every new account opening, every new, every lending approval that is being given, every transaction that is being processed, especially in our transaction ecosystem, all rely on this aspect called trust. Trust in terms of we have the assumption that whoever is making such transaction or making such requests are who they say they are, and also the trust in the institution that are also keeping these funds for us safe. But what happens when this assumption becomes blocked? So assumption here is every transaction is flowing well, lending is being approved, and we're getting more lenders. We have our capital inflow coming in, and then we have the trust also being, or our confidence being boosted up. But when this assumption now breaks, everything that lies with it also breaks, and it slows down. And that brings us to why we are here today. So for years, we can take trust for granted, but everyone in this room right now would agree with me that that trust that we take for granted cannot be taken for granted anymore, especially with the way everything has shaping and expanded in the financial crime and also in the cyber security area of the economy and the globe as all. So we are colliding across three massive realities today. The first one is the threat has changed. Like CP Henry spoke about, saying about how cyber criminals are working with speed now, focusing on the keynote speaker that we had. Yes, they are no more using the traditional method where they act isolated as and try to get information before they perform their crime. Now they have AI, they work with the speed of light, with speed, and they are able to scale up in terms of how the financial fraud comes about. So we have reports that says financial fraud has fallen to 31%, like successful attacks has fallen down to 31%. But in terms of the cost of our financial sector, it has moved over to 100 billion naira across 30 major incidents that happen. Deepfake now is targeting Africa and the entity checks, which has surged to 393%, and camera bypass injection attacks exceed 100,000 monthly. The second thing that has brought us here is the rule change, which is being led by CBN's baseline standard that was pushed, where they've pushed 17 regulatory action, which they expect to be implemented within 14 months. So compliance is no longer a paper shuffling exercise. It requires an integrated architecture, not isolated architecture, but integrated architecture that can help you see your automated AML, and also not just automated AML, but actually seeing it real time and being able to detect it in real time. And last but not the least, the pressure has changed. Having earned our exit from the FATF grey list, which previously suppressed an estimated $30 billion in investment, the burden on us to prove that we are conforming and complying to these new standards that we have put in place and we are holding it to practice has come to place. And because of that, international market is also watching us and seeing if we actually have developed and grown, or we are going to fall back. So yes, we have operational gaps in the institution, and because of that, we're now having to have this discussion, which is compliance can no longer be the paradox tax, which we pay regulators, or burden we endure to avoid fines. Compliance is the foundation architecture of trust itself. Having spent years being involved in building solutions and also engaging different businesses and intersecting between risk and growth in the industry, it has been seen that single compliance gap can freeze an institution operation, and it can lead to billions of naira being lost. I mean, there was a situation where a company got hit, and because of that, their business was halted for the day. And just that business being halted for the day, they lost up to, and that's just one day, they lost up to millions of nairas. So we came to this forum to discuss the trust frontier, because trust is now the primary line on which African financial institutions compete with. None of us can cross its isolation. Operating in silos only allow bad actors to have their way. And when I mean bad actors have their way is when we operate in silos and we don't inform ourselves of what is going on, then if the bad actor is able to get to a particular organization or institution, that same method used to access their environment, use it to access another place and another place. So honesty is required when talking about trust. We don't just give a PR response or give an overview and hide the facts, but we actually tell ourselves the truth. And by telling ourselves the truth, we're able to gather, come together, resolve it together, and prevent these actors from moving ahead with their fraudulent transactions. So, with all this being said, that is why today's program is structured to deliver actions. A keynote which we've had already from CP Henry, and then we'll have 2 working panels where they'll focus on the CBN baseline that was released this year, and also confronting the machine architecture that is being used both for the cyber threats, criminals, and also the cyber defenders in the financial space. We'll also look into Adhere, our solution, our platform we built that is unified, a real-time compliance architecture to help address what we are currently facing. Last but not the least, we'll be revealing our report that was in joint partnership with Tech About Insight, where we'll be discussing about the compliance reckoning. So my request to the room is absolute candor. Bring the real problems, the data, the audit worries that you have. Let's discuss, let's address it, and see how us as a company, which we have been building homegrown solutions to help address this native problem, can also come in to assist and address it. Thank you very much, everyone. The frontier is directly in front of us. Let's us cross this together as one. Thank you and welcome to the Trust Frontier.
Thank you very much. Yes, so she mentioned that the AIG had spoken, and after his speech, sir, we don't want you to be in a hurry. We know that when times like this happen, senior government people are usually in a hurry to leave, but I know that you would also have some very good time with us as we start. The person who just finished her speech is the CEO of Smart Comply, which was founded in 2021 and is now trusted by more than 100 financial institutions across the continent, with a product suite spanning Adhere, Secure, Oculus, and Smart Comply Academy. Under her leadership, the company had opened operations in the United Kingdom, which happened in May 2026. She had taken Adhere to British institutions that serve African payment corridors, and she had consistently said that African payment corridors should be treated as a growth opportunity for global financial system rather than a liability. Please, let's celebrate her again. Now, you would not know. It's not under your table, so don't be scared. There are gifts for people who would answer some questions right before we go to the panel session. And if you get it, I promise you, you get something immediately. We've mentioned all sorts of fraud that had happened, but I just want to give you an insight into one. The Nigerian banks and financial institutions, they lost about 52.26 billion naira to electronic payment fraud in 2024. What did that figure fall to in 2025? To help you, I'm reeling out some answers. 48.90 billion, 39.75 billion, 25.85 billion, 18.20 billion, and 12.40 billion. I go again. Okay, I thought somebody was already raising his hand. You know the answer. You know it. Okay, please help me give him the mic. He knows the answer, Abi. He's not the right person. All right, the AIG has disqualified you. Thank you, sir. So another person in the room. Sir, from EFCC? Are you sure? Well, I need to confirm. Should I check your ID card? Okay. All right, no problem. Please give him. Let us see if we will get it.
25 billion, that is C.
Wow. Please, let's celebrate him. We got it right. The gift is coming shortly. Yes, you will get it. Another one. In 2025, what share of Nigeria's reported fraud activity came out of Lagos alone? AIG has taken us to Agbo. So those boys too know that Agbo is a good place to do business. You know. But aside from that, the options are 21%, 34%, 48%, 63%, and 79%. Somebody's, okay, that seat is a good seat. And I think it's only one guy. Blessed are you amongst women, bros.
63%, that's the...
63%. All right, she got it right. So just over 63% according to NIBSS. Abuja was a distant second, around 3%. Then Ogun, Rivers, Delta, roughly 2 and 2.5% each. That concentration is not a moral verdict of Lagos. It is simply where the transactions are. Business. When they say the commercial center, you can confirm. All right, and the last question now. In October 2025, Nigeria was removed from a significant international list after completing an agreed action plan. Which list? 1, the FATF Grey List, the OFAC Specially Designed Nations List, the SWIFT Sanctions Register, the Basel AML Index, the Interpol Red Notice Register. People wearing coats in this front are scaring me. They are the only ones raising their hand. Okay, sir, I'll keep your own to the second set of questions. I almost said two. That's why I said I will keep his own till the second set. All right.
The FATF Grey List. A.
I need to check this thing. Is it highlighted on the screen? Please, let's celebrate her. The Financial Action Task Force Grey List. Nigeria exited in October 2025 after completing its action plan, and it was a real achievement. But exit raised the bar rather than lowering it. Regulators now operate operational efficiency, which means quality suspicious transactions reports, defensive risk assessment, and demonstrable outcomes, not a policy document in a drawer. Please, let's celebrate. Let's celebrate the country as a whole. That means we are getting better. But part of what will help us better is what we are discussing today in the trust frontiers. At this time, we'll go into the panel session, the first panel session for today. And I know that you will be excited. What's the title? From Mandate to Machine, Operationalizing the CBN AML Baseline. From Mandate to Machine, Operationalizing the CBN AML Baseline. And to lead discussions today, I have Mr. Daniel Obot, the Divisional CEO, Secure, who will be moderating the session. Please, let's celebrate him as he comes forward. Thank you very much, Mr. Daniel. He's the Divisional CEO of Secure, the governance, risk, and compliance platform within the Smart Comply Group. You are welcome. Please have your seat. Yes. Others who will join him up here include Oluwatosin Obadimu, that's the Manager, Industry Fraud Desk, NIBS, NIBSS. Oh, I see. I see. You see, from the list that I have with me, we will surely know them. We won't call you again. I've noted your face. All right. Apart from him, we need to know that every fraud number used today came from his organization. So NIBS is doing a great job, and we need to celebrate them again. Please, let's celebrate him once more. All right. Also, I have somebody that we worked in together into this event, in person of Mr. Roland Okondo. Please, let's celebrate him. He's the Vice President Products, Novak Payments. Novak Payments is also another great company to know. Now, to also make you know that some regional government conglomerates are also in the room. We have Mr. Abiodun Gbade. Abiodun Gbade, that's the head of IT, Odua Investment Company Limited. Welcome. I hope you did not experience the traffic earlier today. Yes, because the business. I wouldn't want to do a public service announcement for you. But you know, that Premier Hotel, maybe you just give the GMD a room for 2 weeks so that they can develop more solutions. You understand? Yes. So Premier Hotel is one of the businesses of Odua Groups. Right. Thank you. And he's one of the voices out of the financial industry who will be contributing to this. We also have Adeboale Adegbite, Enterprise Business Manager, Fast Speed Technologies. You are welcome. And to close the... Oh, all right. Don't worry, I will move. We will not keep you in the dark at all. All right. So the next person I'll be calling is Ayodeji Jayola, Chief Information Security Officer, Hydrogen Payment Services Company Limited. Please, let's celebrate him more. Thank you. All right. So I'll be handing over to the moderator, and you'll have a nice time.
All right. Good morning, ladies and gentlemen. You're welcome once again to the Adhere Frontline Compliance Forum 2026. My name is Daniel Obot, and I'm the Divisional CEO Secure, which is a subsidiary under the Smart Comply Group. And you're welcome to the very first panel session of this forum. And in this session, we'll be looking to discuss operationalizing the CBN baseline. Now, earlier this year, sometime in March 2026, the CBN, when they released the new baseline standard for automated AML solutions, this sparked conversations from whether institutions should automate to how they would operationalize the standard in reality. Now, we're not just here to debate if institutions should automate. We're here to ask a fundamental question, and that is, how can financial institutions fully operationalize the CBN baseline standard in reality? And by doing this, we have put together a very excellent, distinguished panel. We've already introduced every member of this panel, and we're happy to help us contribute to answering this question. Now, these questions that we'll be discussing is going to help us shape the assumptions a lot of us share in this room, and actually help us answer these questions. And maybe at the end of this session, we hope that all of us in participation here can take back actionable ideas that we can incorporate in our institutions come next week. I'm going to start again by introducing and welcoming every member of this panel. I'll start with Mr. Oluwa Tosin, Manager, Industry Fraud Desk, Nigeria Interbank Settlement System, NIBS. A round of applause, ladies and gentlemen. On the panel, again, I want to welcome Mr. Roland Okondo, VP Product, Novak Payments. A round of applause, ladies and gentlemen. We're also welcoming again Mr. Abiodun Gbade, Head of IT, Odua Investment Company Limited. A round of applause, ladies and gentlemen. Also, we are welcoming again Mr. Adebowale Adegbite, Enterprise Business Manager, Fast Speed Technology Solutions. You're welcome, sir. And finally, let's join me to welcome Mr. Ayodeji Jayola, Chief Information Security Officer, Hydrogen Payment Services Company Limited. A round of applause. Thanks for joining us in this session, sirs. We really appreciate your time. Now, before we start the session, let's share a few key insights in the industry. I see that the MC has already given us some nuggets already we can build upon. But we're going to share these key insights so that every panelist can digest it and then also build the conversation around this key insight. First, identity is tightening. The CBN has limited the number of times individuals can change the phone numbers linked to their BVN. The fraud data sharing gap between institutions is estimated to cost the industry billions, because mules and synthetic identity recycle across banks and fintechs that do not share the same view. Now, Adhere, the host platform here, monitors more than $1 billion in transactions every month and reports about 70% less manual compliance work and about 40% fewer false positives. let's digest that. These key insights, right? I'll start with Mr. Roland. The baseline changes not only affects compliance requirements, it changes product design, right? Now, as a product person, from a product standpoint, what does building for the CBN baseline change about how you design onboarding and monitoring from the product standpoint?
I think we've historically operated a funnel model in terms of onboarding. What do I mean by funnel model? If you've ever gone for, say, a concert, you know how like everyone is packed at the gate, and then the security, they just let you in, then you verify your tag, and immediately you get into the concert, that's it, nobody's checking, you know, anything that you are doing. And I think what the standard does right now is it moves us from collecting that data to proving a judgment. And what does it mean by that? It means that that is like the first step in a lifelong risk file. And I think that has what I think has three major implications, right? The first one is that, you know, verification, KYC, KYB needs to be continuous. It cannot be static. It means that even after you've onboarded customers, you need to also be able to still verify them, you know, periodically. The second implication would be that the labels that we attach to customers' risk profiles, right, cannot be static. It has to be dynamic. And what do I mean by this? Typically, when you onboard customers today, it means that the way most risk profiling systems are designed is that you just label a person, oh, based on what I have, the information I have on this person, PEP screening, sanction screening, everything, this person is a low risk customer, right? What the standard is saying is that can't be the case anymore. It means that based on their behavior and their trends, that needs to change, right? And I think the last one is to build the monitoring in a way where we are able to establish all details of the customer's behavior, right? Monitoring cannot just be static anymore also. It also has to establish a pattern, establish a behavior, and be able to build case file. And I think that the change, that shift from that funnel model of onboarding customers and just letting them in to the sustainable way of managing the customer's behavior is the biggest shift for designing products right now.
Thank you. Very, very useful insight. So I think from the product standpoint, we're looking to retrofit how we design our products, especially when it gets to, as it concerns onboarding of customers, to ensure that there is a sharp alignment with the requirements of the baseline standard. All right, thank you, Mr. Roland. Let's turn to IT. Product vision is one thing, just as Roland has highlighted. Legacy infrastructure is another. Mr. Abiodun, from an IT and integration standpoint, where is the real work?
Email engine, for it to be effective, depends on the quality, timelessness, and the exactness of data it actually receives. Now, all of these are the issues that actually affect project failure. That actually brings delay in internet. For instance, quality of data. Now, let's say for instance, myself. Let's say for my core banking system, the name, the record is Biodun Bade. But for the card system, it is Bade Abiodun. But for the let's say mobile banking, it is Bade A Abiodun. Now the AML system name sees all this information as different customers and is not able to actually process that. that. So that creates constraint for it. Also, also when it comes to data ownership, now the question is that we need to define data structure. Who owns what? Which data precede before the other? And I know all of this helps us to set data governance in place. And it's not something that is just about IT, but every business unit takes ownership. Everyone takes ownership. So it's a joint ownership as to how we will get to consume and actually process data within our own environment.
Thank you so much, Mr. Biodun. So key takeaway there, I believe, is data points. For these solutions to be able to speak to each other, I believe the structure of data, as you've pointed out, is key, so that these systems can actually process the same identical information without any distortion, which is key in meeting up with timelines. Because I believe this would, in your own opinion, cause delays in integration, which is quite important. All right. Thank you, Mr. Biodun, for that insight. We'll shift to Mr. Oluwatosi. My first question. As institutions automate under the CBN baseline, what should each one be feeding into and pulling from an industry level intelligence, so that the machine is not blind to what just happened next door? Now we established some key insights, especially within the sector, right? There is no shared view between the financial institutions and fintechs, right? So what should systems be pulling from, so that there is a bit of a convergence?
Okay, thank you very much. Okay, this is how I'll address that. Over time, what we have seen in the industry is a lot of times we rely on post-mortem data. How do I mean? Somebody has reported, for example, let me give you an example. Some of the things, don't forget, the topic of this discussion is around from mandates to machine. Part of what CB had done in the past is to put those baseline on fighting fraud. What are those things that they have done in the past? They have told us that anytime you open an account, you must push it to NIBS. Now, there's something called an industry customer account database. It sits in NIBS. And the essence of that is for everybody to have the same view. How do I mean? If fraud happens in Bank 1 and Bank 2 is not aware that that fraud happens. However, Bank 1 is compliant because Bank 1 pushes its data as soon as those accounts are open, and Bank 1 decides to watchlist a BVN, of the account. Now, Bank 2, this same customer goes to Bank 2. Part of what we also have is that those BVN will have been watchlisted, and what that means that at any point in time when you want to do transaction, you must check that whether this BVN is already on the watch list or is not, so that you are not allow that person to do any kind of electronic transaction, if he was on the watch list. But however, because Bank 2 is not on compliance, as in they don't push through the iCard, Bank 2 will not know that that BVN was listed. Bank 2 does not even check to even confirm whether that BVN is watch listed, right? Now, because these things were put there because of the fraud we were seeing in the industry. And that's why one of the countries, like the AIG said, the AIG fine said this morning, Nigeria is one of the cards is one of the most sophisticated device, that we have, outside of the fact that, yes, people use social engineering to get the information and all that. And Nigeria is also the first to do instant payment in the world. So you can't take that away. So when it comes to technology, we already have that sitting in Nigeria. However, now the level of compliance to ensuring that things that have been put in place work the way they are depends on the institution we have here, right? Now, if I now say, and she was checking the dashboard, and she was checking the dashboard because we have industry fraud desk that sits in NIBS. Was checking his dashboard and he saw the number of transactions that had happened in watchlisted BVN in the industry because it was on the dashboard. And she asked, that are people still doing transactions through watchlisted BVN? And she instantly said, I need a spool of everything that happened yesterday. And what's that going to happen? What's going to happen that way? He's going to push to the banks and say, why are you doing this? So what am I saying in essence? I'm saying that if we do our own part in our different silos, and also leverage on the intelligence we already have in the industry, which is in NABES, most of the times, this we're talking about will be a thing of the past, and that's what just I'm saying, right? Yeah, thank you.
So are you saying that, a follow-up question to that, are you saying that a lot of the institutions, it's a compliance gap, so they are not really contributing enough data that improves the intelligence for everyone in the ecosystem?
Okay, so there are two areas to it. There are sometimes is knowledge gap, right? A lot of times we get microfinance bank call NIBS and say, I need this information. And I say, okay, have you checked the CBN regulation guideline? A lot of them don't even know that it exists. So many of the questions that they come asking are already sitting there in the regulation, right? For example, a microfinance bank will tell you that they don't. Now, if I say microfinance bank is more of the fintechs, we have a lot of fintechs, running on that space, so because, now we call them microfinance bank. Now, because they don't know, a lot of them don't push. However, there are some that know, but because they feel people want to ride under NDPA, data protection and privacy, and truly that's not what it is. Even in the Data Protection Act, it says around something that's of the national interest, and that's why those things were put in place. The ICA, the BVN, the watch list. We were talking about grey list here. Watch list, one of the reasons why Nigeria entered the grey list, because we were not, in as well, we have so many of those things in practice, but they are not documented anywhere, right? So what are we saying? We're saying that those banks, a lot of them know, but they just don't want to comply because they feel, they don't even understand why NIBS is there in the first instance, because they are scared of another person knowing the number customers they have, Meanwhile, everything you do in NIBS is actually anonymous to the other person. So when you are on the system, you only see your own data, you don't see other person's data. And that's the reason why CBN was actually, the NIBS was actually established in the first instance. And that's my comment. Yeah.
Thank you so much, Mr. Oluwato. So I think that is very insightful. So what we can see there is both a combination of compliance gap as well as knowledge gap on the part of smaller institutions that are supposed to also contribute to intelligence that other institutions within the ecosystem can share from. All right, moving to security. My first question to Mr. Ayodeji Siso. With cyber threats becoming more sophisticated, what security capabilities should institutions prioritize alongside the CBN AML baseline?
Okay, thank you very much for that question. And I'm not sure there is a better time to review this than now. What should institutions prioritize now? Most times we look at the siloed environment, we look at your own organization, and we are interested majorly in ensuring that that aspect of the organization is secured. But the truth of it is, the more we look at the enterprise security, talking about your individual organization, you would not definitely get the security that will assist and ensure that the ecosystem is protected. The way we operate now, everyone is interconnected. The AIG spoke about that. Bimisola also mentioned the fact that in as much as we still do things in that manner, we will not be secured as much as possible. For the CBN AML requirements, for me, I would say that should just be the minimum standard for every organization. It should not be the end goal. Once we sit and base all the conversations within that aspect, you will discover that the kind of output in which we are getting within the industry will become better. People will even understand why they need to integrate and submit their data to NIPS so that it can be shared. Two key things I will speak about. The first thing that would assist institutions apart, or where institutions need to prioritize apart from the CBN AML law, the first one is organizations should move into an identity-centric solution. Talking about identities. There is no way you would get into a place like this without having an identity. For as many of us, some of us came into this place, into the entrance, there were different checkpoints, there were different touch points. So when I got to the entrance, I asked the lady, did I register? But I think there was a kind of automatic registration for me because I'm a speaker today. I met another colleague here today that said he got to know about this program because someone forwarded the invitation to him and he registered. What am I speaking about? Identity. Outside the CBN AML laws, we need to understand the place of identity and ensure that the basics from multi-factor authentication to ensuring that you know that particular person, repeated verification, validation occurs at different points in time. That is one thing I think industries should, financial institutions and industries should prioritize with respect to in collaboration with the AML requirement. The second thing has to do with artificial intelligence. I'm seeing quite a number of people for the first time today because the organizers have taken me out of my cybersecurity fold, which is very, very important. But there is no way you have conversations like this without speaking about artificial intelligence. So today, outside the AML requirement, there is a need for you to have an AI threat detection and security operations. Without that in those organizations, you discover that you would not get the best results out of the different conversations. You need a security information event manager. You need to have the basic security solutions that would be put together that will give you the desired reports. I'll conclude by saying this again. The minimum standard should be that AML baseline. That should not be your goal. Thank you.
Thank you. Well said, Mr. Ayodeji. A round of applause, ladies and gentlemen. So we should not just think that when we aligned with the CBN baseline, that's the end of it. We should also take more adequate steps in terms of security, access restrictions, authentication, as Mr. Ayodeji has mentioned. So I think that is a key aspect a lot of institutions should take back with them after this session. My next question to Mr. Adebowale, the enterprise business man. Now, my first question, sir. What slows enterprise adoption of automated AML the most? Budget, skills, or trust in technology? I think maybe it might be budget for a lot of institutions who are very particular on budget. But what strikes that most for you from your engagement?
Thank you very much, Daniel. That's good morning, everyone. Yeah, I think in this case, the three actually slows down the implementation of this AML thing. But what actually takes the front run, it's trust, actually. You know, basically, you know, how do you trust something you cannot see physically? You know, all this AML we're talking about, they're just virtual things. You know, it's not a product that you can actually pick, a tangible thing, you know. So, trust. Will it actually, you know, integrate properly into my, you know, legacy infrastructure that I have on ground? Will it actually, you know, work seamlessly? You know, will it be totally be adopted? You know, so it speaks to trust here. Now, what follows next is budget. Everybody will look at it, you know. The AML is a software. There's no direct increment in your revenue. You understand?
Right,
So
right.
every business decision maker, they're out there to maximize profitability and, you know, minimize loss as much as possible. So you begin to wonder, how does this translate into money? You know, they drag the fee to, trust me, the AML thing is not cheap, I must tell you. It's very expensive, you know. And as a bank and financial institution, you are there to make a lot of money. You begin to look at, this is draining. Could it drain my, you know, profitability? Then of course, skill. You know, skill follows suit. Now, that is where, you know, we begin to think about, okay, who are the people? Do I have technical in-house people that can actually, you know, man when this AML is being implemented? You know, then we're also looking at, you know, skills from, you know, from those that probably are used to the brick and mortar kind of, you know, procedural process within the financial institution, you know. So I think the three, you know, slow it down. But what's actually slowing down most is trust, actually. Thank you.
Thank you so much, Mr. Adibowale, for that insight. So what stands out the most is trust. So a lot of institutions would be a bit not too receptive if they do not trust the system. They need to grow to trust the system first before full adoption. Thanks for that insight. And of course, I know budget is always top of the list as well. Yeah. So shifting back to product, Mr. Roland. Now, from a product perspective, where do product and compliance teams most often collide when a deadline like this lands, especially with the AML implementation roadmap already closed? So many institutions are we're scrambling to submit before deadline, and of course the clock is no longer ticking; it's running. So everybody needs to become very compliant. So, from a product perspective, where do product and compliance teams most often collide when a deadline like this lands on their table, and how do you resolve it?
Yeah, I guess for me, with most product teams, there's typically a clash with compliance teams, because the PM or the product manager is looking to solve friction issues, right? I mean, friction with the product, and the compliance person is definitely trying to be compliant, right? Especially with a timeline like this and a project like this, is like the compliance people are obviously prioritizing regulatory comfort, while the product person is trying to find the balance between that user experience and then still being compliant. And more than half the product managers will just be more on the side of, I need it to be easy for my customers type of thing, right? There's also the silent friction of who owns the exception. And what do I mean by an exception? In the event that we implement all of these nice things that compliance people talk about, and even though you understand the security aspect of it for the business, is that in the event that there's a false positive, what do I mean by a false positive? We flagged, a transaction that, seemingly bore no harm, right? And we've lost revenue, right? Who bears that exception? Compliance will say, well, the rules did its work. Products will say, well, we've just lost the customer. And I think that's where you find the biggest friction, and how would I, if you'd ask me, or let's say, how would I solve, or how should we solve that problem? I think is by putting, friction, metrics of friction and the ease of use, and all of the things that matter to product people on the dashboard, alongside false positive rates, right? So that way, it's not a question of both fighting against each other, as opposed to both of them moving together, right? Because again, the rules are the rules. They are created for certain reasons, and we also have business objectives to meet. And those are two very important metrics that need to be tracked, not against each other, but complementarily. I think that's how typically we solve the problem.
Thank you. Well said. So there has to be an alignment. There has to be maybe somewhat of compromise between product as well as compliance, just so that we can, as institutions, meet up with deadlines and expectations of regulation like this. Now, another key industry insight. The reported digital payment fraud fell about 51% to 25.85 billion naira, just as the MC projected earlier. But reporting itself, another key insight, fell by 34% in the last quarter. And the 2024 base was lifted by a single large incident. So the fall is not the clean win that it looks like. Back to Mr. Oluwatosin. Now, you sit at the industry view of fraud. What does the national picture actually show right now? And what does that reported 51% fall in 2025 hide once you account for the drop in reporting?
Hello? Okay. Yeah, thank you very much. Okay, so I'm going to start with the good part. The good part is a lot of efforts were put into fighting fraud last year, especially 2025. A lot of efforts. NCC can attest to that. The AIG, DSS, they can all attest to that. A lot of effort was put in there. What we did in 2025 was taking the fights to them. We can also take away the fact that we still have a lot of them out there. So, however, in 2026, what we're seeing is that they're not shifting. Yes, in 2025, we also see that, especially the new entrants, what do I mean? The MFPs, the new ones getting the license. What do these guys do? They go to, where do they go to? They go to your mobile app and go to Play Store to go and check those banks that are just going to that space, into the mobile transfer space, saying I want to have my mobile app. You know the way it is now. A microfinance just comes and they just need a mobile app, and because they want all the microfinance is supposed to be micro, right? But because they want to have a view of international thing, and how do they do it? If you have a mobile app, people can all over the world can actually open an account with you, and they start doing that. So, but however, part of what they don't do at the time when they get this mobile app is what has hit the big ones? What are those big ones learned that I need to learn before I go in? A lot of times that is not done. So this threat actor sits there and wait for you when you launch that mobile app. So those styles, those techniques that they have used in the past for those, for the commercial banks, they're going to now use for you and see whether you have actually covered those spaces. A lot of times we have not, right? Now, so what are we seeing? We're seeing instances where majorly most of the acts are on the new entrants. We are also seeing the fact that, talking about 2025 also says that, the huge chunk of 2025 fraud actually came from one bank, right? And that's where, like the AIG said, internal threats, and it was just an insider, and that was it. And that's the biggest threat most of the times, right? So now for 2026, in as well, yes, the figure is looking around 6 to 8 billion, that has been lost already, but the number of attacks that have been raised at the time when I was doing my counts was almost 30 financial institutions. And those 30 financial institutions, a lot of them are microfinance banks, right? And like, unfortunately, a lot of times when these different techniques are used, people tend to want to not let the other party know, right? Like something that happened this year alone. A particular solution is being used by different banks. Now, he hit the first bank. The first bank was able to copy it before he left. The second bank, he hits them. NIPS informed the second bank that we're seeing a lot of monies leave your bank. They were able to stop it. Now, we're asking, what exactly did they exploit? They are not going to tell you, right? The same exploit was used in the third bank. Now, the same third bank we saw, and the third bank also told us that this is what actually was exploited, right? Because we saw it and we stopped it at when it started and all that. Now, at the time when we saw the third exploit, we're still trying to put everything together to advise the industry the fourth one happened. The same solution, right? So, most of the times is not that these guys have this knowledge. It's more of us not sharing information, about what has hit us. Now, going to the figures. Now, a lot of the 2024, 2025 were all these small ones, customer induced or customer were hit and all that. Now, because the subsequent ones are now hits, why will I want to go to the river when I can go to the ocean? Why will I want to hit a customer when I can hit the institution itself? So the hits that we saw in 2025 and now seeing in 2026 are basically institutions being hit, not the customers. So when this hit happened, you call the bank and say, how about this thing happened to you and all that? He said, it's a glitch. Does it make sense? Now, if you say it's a glitch, did money leave your bank? Yes, it left. So is that not fraud anymore? And that's where the issue is. And that's where we are right now. So most of the time, what we're doing right now is to educate and, more like moral suasion to say, when you report, nobody's going to throw you out there, because that's this trust thing we're talking about. Nobody's going to throw you out there. What we're trying to do is to learn so that people will learn from what you have and not experience what you have gone through. Thank you.
Thank you so much, Mr. Oluwatosin, for that insight. We'll just try to accelerate because of time. Back to product. Roland, build, buy, or orchestrate, if you had to pick only one, especially for a fintech that is moving fast, which one would you go for? I know Mr. Debowale would probably go for buy because it's in enterprise technology, distribution or consulting. So for you, Roland, which one would you pick? Buy, build? You want to build from scratch, orchestrate?
To go straight to the answer, it would be orchestrate, especially for a growing fintech. And as he mentioned, one of the constraints would be budget, right? But beyond just answering the question and saying orchestrate, what are the pros and cons of building or buying, right? Building breaks on time and liability for most startups or most fintechs. Again, the cost to build, right? The team, the resources, and given the deadline, right, or the project, you still also have, like, building doesn't mean that's the only thing you're building part time, right? It's a limited team with limited resources, with multiple objectives and different goals. So again, building, time has the impact, and then there's also the liability that that sits on the compliance officer. And I don't know if many people are aware, but according to the Money Laundering Prohibition and Prevention Act of 2022, the compliance officer is highly liable for whatever exposure, occurs as a result of their decisions on whatever AML platform, regardless of how it was sourced. So, again, beyond that just being a technical decision on should we buy or should we, it's also a personal liability decision, right? How about buying? Buying obviously comes with its own unique challenges, like he mentioned, integration, data, and I think that what orchestration does is it is true to yourself to know that you don't have to own all the layers, right? You only need to own the decision-making layers, right? So again, you're happy to plug in monitoring, screening, verification, all of those other compartments to your complete AML solution that allows you make good decisions. So you know that you only have to you only have to own the decision-making part of it, and use verifiable or competent tools to be able to augment the other part. So I think orchestrate would be, again, we also have to look at the different companies and what stages they are. You can't expect a tier 2 fintech, for example, to be trying to operate on the level that a tier 1 bank would. Definitely not. But what this baseline standard does is that the efficiency is measured the same regardless of size or operation. The efficiency of your AML solution is what is being measured, and I think that orchestrate just works for most fintechs.
All right, fantastic. Thanks for that insight. So, orchestrate, that's the position here, and of course, what's also that stands out there is you don't have to own every layer. You just have to have full control of the decision layer. I think Mr. Adebowale again would agree with that. You have to, you don't have to own every layer. I'll shift back to security. Mr. Ayodeji, as a CISO, how do you ensure stronger compliance without compromising security on customer experience?
Okay, thank you very much for that question, and I will make it as detailed, also taking cognizance of our time. So you talk about security, you talked about compliance, and you also spoke about customer experience. This is actually a question that every chief information security officer would definitely face and be asked at different points in time. But there's this false misconception that allows you to think that compliance is security. Compliance is not security, but I'm going to break it down. So for example, please, if you have not been paying attention in this all, just focus on me now.
Focus.
Yes, please. Now, have you ever entered a public bus? I know most of us, or some of us now, at this might not. I don't expect my AIG to be entering a public bus now. But those years when you were speaking, you said when you were still a child. Have you seen a public bus driver, when he or she most times discovers the road safety guys ahead of him, what happens? Brings the seat belt and puts it by the side. Do you notice that? So I'm not the only one. Great. Now, when the car needs to stop, when it gets to the road safety person, there's a passage. Maybe the road person is just, maybe there are definitely a whole lot of other people passing the road, and you have that passage. But if another kilometer or 2 kilometers away, the person matches the brake, would the seat belts, the manual or whatever seat belt, will it be able to protect him? Of course not. So the question or the idea behind this question should not be to select between compliance, security, and the customer experience. As a CISO, what I would do is I would ensure that security is built into the customer journey. All through. Now, you don't need to know, or you don't need to get to a station whereby you are like, these people have introduced something secured, it becomes a burden on you. No. It should be part of the normal process that you enjoy seamlessly. There was a particular application that was built in a global company, and it had North America, Asia, Africa, and also Europe. Europe, because of compliance and regulations, were looking at GDPR. That's the General Data protection rules, regulations. In Asia, they were particular about the data residency. Just like now we have CBN talking about us localizing our data in Nigeria. If you have not started, please start immediately. In North America, they were looking at privacy requirements, and that was key for them. In Africa, as you know, we always play that catching up role, and they were all interested in understanding what the emerging technologies look like. What now happened to the customer in this instance? The customer got frustrated because there were a lot of regulatory requirements put into place. Compliance wanted more forms, not necessarily to ensure that the system is secure, but they needed to make the regulators happy. For example, in Nigeria, CBN. The security team wanted a lot of further controls, authentication, verification, validation at different points in times. The business people, just like you were mentioning product the other time, were like, when you introduce all these things into the equation, the customers would abandon this application and will move into something else. The organization tried to apply all these measures. What happened? Compliance scores increased. Compliance people, are you here? Are you happy? The score increased. Customer satisfaction did what? Nosedived. Dropped significantly. What happened to fraud? Fraud did not stop. The fraudulent people maneuvered their way through the systems. Nobody was happy. But what do we need to do? There are things we need to put in place. The first thing is this. We should not always throw in a universal approach that would bring friction into the system. Someone mentioned categorizing risk into their different compartments. Is the risk that is attached to this transaction, is it high or low? If it's low, then you can allow some things to pass. Look at the suspicious behavior and not stopping and dropping all customer transactions. The next one has to do with the fact that the outcome should be, the goal should not be compliance. The goal should not be compliance. Rather, how the entire journey will be suitable for the entire team. I will conclude by this. Security needs to be intelligent. So it's not about choosing one. Security needs to be intelligent. Compliance needs to be automatic. You comply. You just know that compliance is something you need to put in there. Like someone said that secured organizations are most times compliant. But organizations that are mostly interested in compliance, they are not secured. So you need to take note of that. And the final one is, after making security intelligent, after also ensuring that compliance is automatic, then the customer experience should be seamless, should be a sweet one. And once you employ that, marrying and putting the three together as an entity, everybody smiles, everybody is happy, the system is secured, and we have a better environment. Thank you.
Yeah, thank you, Mr. Ayodeji. Round of applause, ladies and gentlemen. As a follow-up question to that, Mr. Ayodeji, I think security sits at the front of this. What is the one security investment every financial institution should make in the next 12 months to stay ahead of financial crime?
Thank you very much for that question. Just one thing. I've spoken about it before, but I will still reiterate. But before I go into that, there was one rich, wealthy man. Rich and wealthy. Very, very popular. I won't tell you the person's country. The person might be in Nigeria. Maybe the person is inside this hall. You won't know. This person did everything to protect his castle. He got the best of the security locks. I don't know for as many of us that have gone to China before, I've not gone there. These China walls, the tall ones, he built it around his castle. He did not stop at that. He got physical guards. There are some policemen you will see. When you see them, you behave. You see some other military guys, you know that, no, this one is a no-go area. He had all those systems in place. But what happened one day? One of his trusted servants did what? Went into the market and dropped the key. Dropped the master key, and by the time he went home, he left the key there. One of the criminals picked up the key and straight to the castle. This person did not fight the security guards. This person did not break any wall. There was no jumping, there was nothing. He had the key to the entrance, moved into all the rooms, picked out all the valuables, and was fine. This wealthy man woke up the next day and brought in all the specialists, raised the wall again, bring in the security guard, remove the initial set of forces, brought in other people. One wise man called him and said, "This is not the problem. Access has already been compromised. Someone already has the key to every room within this castle. What is the key I'm referring to this morning? That thing you and I need to ensure that we prioritize: identity. Identity. At every instance, let us ensure that you know who is gaining access into our systems. You know who is gaining access into your environment, into your homes, into wherever you stay. Then I'm sure institutions will be better secured." Thank you.
Thank you, Mr. Adhere, for that insight. So, because of time, we will just try to close this session. I believe, ladies and gentlemen, if you agree with me, this has been very insightful. This conversation we've been driving just helps us think critically of how we can operationalize the CBN baseline across our different institutions, our respective institutions. Now, let me leave everyone with a few things we've learned and heard today. First thing that stands out is compliance is no longer about installing software. It's about operational effectiveness. I think a lot of the speakers have already spotlighted that. So it's about operationalizing the effectiveness of any system that you implement in that environment. Second, legacy technology is not an excuse. So especially from the IT standpoint, Mr. Biodo giving us a bit of insight on how to remove the bottlenecks in terms of integration. Integration can be difficult, especially when you are trying to integrate two separate systems. I've had experiences rather, where, data points, the structure of data, which he also highlighted, is a problem. So if systems cannot throw or speak to each other because of that gap in the structure of their data, it becomes a problem. It's difficult, but it's achievable. Third, data privacy and AML are not competing objectives, especially with the highlight from Mr. Oluwatosin. A lot of the institutions not wanting to, maybe there's a knowledge gap. It's a combination of a knowledge gap and a compliance gap. So this bridging that gap will help to reduce fraud and also shared intelligence, because once there's shared intelligence across financial institutions, fintechs, that helps to prevent another occurrence. If somebody has already experienced a certain incident, then that same shared intelligence guides the next institution in avoiding that occurrence. And finally, key takeaway from this is institutions that move early won't simply pass examinations. We're not just trying to comply, we're also trying to ensure we merge compliance with security, as Mr. Adeji has really highlighted in this session. Security should also sit at the front of operationalizing the CBN baseline. Gentlemen, thank you for sharing your expertise. And ladies and gentlemen, please put another round of applause for our distinguished panelists who have contributed to this session. Where's the MC? Yes. A round of applause again, ladies and gentlemen.
Thank you very much. Thank you so much. The only person that I want to squeeze a little out of them here should be Mr. Ayodeji. And you know why? He needs to confirm to me if while he was growing up, he used to attend Tales by Moonlight recording sessions. Because when he was telling the story of the man who told them, break the world, bring more security, you will see the way in which he was saying it, and you can feel how his voice was oscillating round across the discussion. Please, let's celebrate them once again. I already owe 3 people gifts. More gifts are still coming. We'll get into the special session that we are here for today in some few minutes. But before we go into it, I still have gifts. I am Father Christmas today. It's not yet December, don't worry. I still have gifts. And at this time, it's just 2-3 questions again before we go to the product unveil. What exactly is Adhere about by Smart Comply? So, the question again is, the Central Bank of Nigeria issued its baseline standards for automated AML solutions on 10th of March 2026. Institutions were required to submit their implementation roadmap by which date? Anybody know the date? It will be so good that nobody knows the date. I'm not looking this way now. Okay. You just checked. Okay. Please, can we give her the mic? Okay. One mic. You've answered my question before, right? Okay.
B, 10th of June 2026.
10th of June 2026. Please,
Yeah.
let's celebrate her. She got it right. That was 6 weeks ago. So 3 months from issuance, which means the deadline passed 6 weeks ago. So the interesting question in the room is no longer whether you have filed a roadmap. It is whether the things you filed is actually buildable and whether anyone has costed it. That's one. The second one, under those same standards, how long do deposit money banks and other financial institutions have to reach full compliance measured from 10th of March 2026? I'll give you now. I'm a good guy. Please, let's celebrate him. Let's celebrate him. He's been raising his hand since morning. He knows all the questions. I'll just pack all the goodie bags and give to
how
him.
about if I get it wrong? All right, so we see 18 months and 24 months.
18 months and 24 months. Thank you, very right. 18 months for deposit money banks, 24 months for other financial institutions. That sounds generous until you break it down. Procurement, integration with core banking, data cleaning, model tuning, parallel running against your existing process, and then staff training. Most institutions will start in month 12. Those who start in month 12. You know the answer, that's why you're laughing. Those who start in month 12 will not finish. Very simple. All right. So let's leave it at these ones for this time. We will come back again to these questions shortly. Now, as we come to the defining moment of the day, the commercial moment that we've all been waiting for, I would say this. More than 100 institutions already use Smart Comply. Adhere already monitors over $1 billion a month, and it's already aligned with the CBN baseline standards. I just gave you that insight. And all of this and more will be shared shortly. I will be introducing the person who will be doing justice to this, which is a future look at Adhere. Please celebrate Anita Ajala, the Chief Technical Officer of Smart Comply, as she comes forward. Now, if you look at her very well, you'll be imagining her position, but plainly, it is the compliance technology designed in New York or London cannot properly work in a Nigerian bank. You have to think of how it will understand our BVN or understand our mobile money flows in Kenya and cannot recognize a West African mole network. And that Adhere. Okay. I thought they wanted to kill the mic so that I won't talk. And that Adhere exists because the team lived the problem rather than reading about it. Please welcome Anita once again as she tells us. Welcome her well. Oh. Thank you.
All right. Good afternoon, everyone. Okay, so what we have here, what we came for is because Adhere was able to set this up, and basically we have a problem which the company has been finding ways to solve. Is not like something that is one-off. Is more of a continuous problem that we are solving and also as we've also listened to a lot of the speakers. One, we have identity problem. We also have continuous problem, that is fraud evolving. And this is where Adhere sits, and this is one of the things we are trying to solve at this point. So I'll be introducing Adhere. Adhere is one of our divisions, a solution that speaks to AML fraud, and also identity, solves identity problem in different ways. And one of it is starting off strong, starting off from your customer onboarding. That is from the first time that you meet your customer, what do you need? You need to identify the customer. And when in the diversity of fraud now, trust is being attacked. Most of the old ways or temporal ways whereby fraud happens no longer happens now. People are now looking for ways to attack trust itself in all areas, whether it's identity, in many ways. They mimic a whole lot of things to say, okay, I'm this person. And with AI now, and we can also attest to this now, AI is evolving so fast and AI is bringing out a lot of things that are so much believable. And if you're looking at it, you're like, oh, is this AI? You're doubting it. So in all these things, it's also modifying the scope of things as well. All right, so why we built Adhere? I usually start off with this, the history. Why did we decide to start up Adhere? Because first of all, we had the cybersecurity part, which was secure, that was basically trying to protect your company from attacks and a number of things. But when it had to do with some of the financial institutions that had issues and there were problems, we couldn't solve this. We had some problems that were financial based, which is maybe transactions. But when it had to do with the cybersecurity, this part could not solve that very specific problem. And we decided, okay, why not have one that is streamlined to solve this particular problem, that we focus on it and we learn how this functions, we develop on it, and we build on it. So this is one of the primary reasons why we decided to bring out Adhere and build on Adhere for those very specific reasons. So first off is to protect the institutions. The financial crime is evolving, as we've said, and is moving forward. So basically it's to protect you. So on the platform, Adhere, AML compliant. So as I mentioned initially, where does it start? Identity verification. There's a whole lot of things that are inclusive into inside identity verification. Like when I walk into a bank, what is the basic things I'm asked of? I'm asked to fill a form, my name, maybe provide my identity, and some other things. But for new banks now, most of them, you just need to download the mobile and do your verification. And you're being told, okay, add your details, provide a screenshot of your identity document, maybe let's say NIN, your voter's card, and at some certain point, do your liveliness check. That can easily be bypassed very easily, which is why we all, and as many people has mentioned it, KYC is continuous, meaning that if you're doing your customer due diligence, you don't just do it one-off. It's a continuous process, and this is what Adhere has come to also solve, removing that burden of maybe manually trying to review your clients maybe after some certain times, everything around either the customer due diligence or the enhanced due diligence. Adhere solves this problem, or Adhere is here to continuously solve this problem. So from the identity verification, especially when it has to do with also your face verification. Now, there was something we were doing, and we discovered a loophole. Let's say that you're doing an identity verification, and the person presents their document and says, "This is my document." They are online; you're not seeing them physically, and probably maybe produces the NIN that this is their name, and it matches the document, and these both things are a source of truth. But how are you sure that this person did not either pick up someone's document, have this person's details, and is able to register all those things? You will say liveliness check. You bring in a liveliness check. So when you bring in a liveliness check and you're like, okay, let's check if you're not a bot that is doing this thing. How do you verify that the person that is doing that liveliness check is the same person in the document? The document is valid, the NIN is valid, everything is valid, but we cannot match the face. Then you get face verification. You see how we keep extending it, and these are different angles or different sources of verification. So here I'm bringing in how Adhere solves that. So Adhere has made it easier. First thing is extremely customizable, meaning that you can literally decide the flow you want to, the pattern, the flow that you want those verifications to handle. Then for the AML KYC screening, that's basically parts that has to do with the sanction list, the PEP list, and also adverse media, especially when you're doing a customer onboarding. You want to know if this customer is a sanctioned individual, or maybe a business, or an organization. So Adhere also speaks to that. Then the customer risk assessment. For all these things, or all these patterns that has also been done, for a very basic CDD, you have your customer risk assessment. And customer risk assessment is not something that is static, meaning the more you perform, the more you do things, the more this risk assessment varies based on, let's say, your transactions, your the verification, the continuous verification that is done, which is very important in catching all this fraud. Now, after onboarding a customer, if you don't continually screen this customer or do a risk assessment on a customer or your customer, so you see where the loophole comes in. This customer, at the time they were onboarded, might not be in any sanction list, and then maybe months down the line, they do something and they enter inside the sanction list, and you don't track that, and you're not able to capture it. And I think there was also a mention of some blacklisted or watchlisted BVNs that are still having transaction ongoing. So what causes that? Loopholes. Why? Because this, you might actually have access to that information, but you don't have an automated system that you pass through with, because obviously as humans we are limited. Even if we have people that do all these things, we get to miss a whole lot of things. That's why we are pushing a whole lot of things towards automation. Why? Machine can process many data, much more data than you can perform as a human being. So for transaction monitoring, so when it has to do with transaction monitoring, there's a whole lot of things that come into transaction monitoring. There's the traditional way that it was done before, and that was a little bit streamlined to compliance. So what happened? Compliance say, okay, this is the fraud. So this is those traditional parts were reactive, meaning how has fraud happened over time? And then we put measures in place, or we put rules in place to say, when this thing is trying to happen again, call our attention to it. But obviously with the evolving technologies, that cannot work any longer, which is why most of the AML solutions are required to be AI based, to use machine learning and all those things. And another part of it would be that behavioral analysis, or you learn behaviors of your customer. Now, how does your customer behave over a certain period? How do we know that this customer's behavior has changed? Example, I'm using Access Bank and I transact a minimum of, let's say, 100K per day in Access Bank over time. And Access Bank and the ML forms an average that this is what I do transact within a period of time. And I try to make a transaction above that, maybe let's say 2 million, and it tends to say, oh, this is too much. This is way above your normal behavior. So what happened? Does it mean that is a fraudulent transaction? Obviously not. Maybe I got a new job that pays me better and I'm able to transact, or I'm doing a business, or I want to do a purchase. How do I get to have this as my behavior over time? Especially maybe something like location. I transact in Abuja and I relocated to Lagos. The system would obviously flag that you have changed your location. This is not the location that you transact normally. But how does the system learn your behavior? So the system basically, over a period of time, we could say over 2 weeks, 1 month, it could say, okay, this person has consistently transacted in this area. So maybe they've relocated. And this is where I keep, I think there have been a lot of discussions against is, why are we using AI to validate AI fraudulent transactions and all that? Where does the human come in? Are we completely phasing out the humans? Obviously not. Why? Because there are still some decisions a human needs to do. And I think most of the financial institutions have it as the fraud unit or the compliance unit, where they review those things and they're like, okay, this is an exception. So you help produce the data that trains this system or modifies it to be exact and reduce a whole lot of false positives. So for, and I still want to, I think someone said something in the last panel session that I actually noted it down. He said, when, for the CBN baselines, let us not take it as compliance, let's go further. So for Adhere, this is what we are very basically doing. We are not just trying to conform to the CBN baselines. We are not just trying to do the barest minimum. We are trying to evolve daily, which is why day after day, monthly, we evolve, we train our data, we change the ways we even train our MLs or use our AI. Why? Because we want to reduce fraud. Basically, we want to be able to catch evolving frauds, because sometimes you get when you train your data and then you see a new set of patterns coming in and nobody has caught that, and you're like, how are people coming up with these new ways to be fraudulent? And for some of our other customers in Kenya and outside Nigeria, when we were talking with them and when we were relating with the data that we are getting with them, most of their fraudulent patterns are very different from ours. They are extremely very different. When I wanted to say, I made a comment, just forgive me because I'm Nigerian. I was like, I think Nigerians are very, the pattern they do it and all those things. They said we are still learning. It's because that we don't know that the amount of fraud that happens in Kenya is a lot. Is a lot, and they were giving those numbers, and the way even the fraud patterns differs. And I'm like, where do people think about these things, and how do they think about these things? Humanly possible, those fraud patterns, I might not necessarily think about them, but that is where we bring in AI. AI is just a machine. It doesn't have emotions. It doesn't process things like we do. So it catches all those slip-off that we might not necessarily catch. And this is what we have built into Adhere, and we are continuously developing in Adhere. So additionally, for your regulatory reporting, that is for financial institutions in Nigeria, we have the STRO, the FTRO, the CTRO. We have all these things possible and available for you as well. So the identity verification, intelligent onboarding, as I mentioned, all these things are very streamlined and they are very much customizable. And we knowing that AML systems are more product build or product niched, meaning that for systems that would use this, they already have an existing system they need to plug these things into, which is why you can easily plug into the system through APIs. You don't necessarily need to bundle the whole app and then you drop it in, especially maybe to also make it affordable as well. Because when it has to do with models, training models for the behavioral analysis, it's costly. It might not be cost effective. And also from the last panel session, they said whether you should pick cost and all those things or security. So all these things are what we've tried to put into consideration. Cost. How much are you making that you spend so much guarding those money, which is also important as well. But this is also one of the things we've tried to make possible. One, streamlining the integration and all that, which is why we also have the individual features, like maybe transaction screening, transaction monitoring, customer onboarding, loan fraud check, and some other features. You can independently use each and every one of them without combining them together. And for you to, I think initially I mentioned something about the customer risk assessment. So for you to build a very correct customer risk assessment, it has to get its information from all the moving parts, which is the transaction monitoring, as I mentioned. How does this person transact, and the risks involved in those person's transactions, the screenings, the sanction screenings, the continuous identity verification. Example, let's say for a particular customer, this person has been having a lot of flagged transaction, maybe behavioral anomalies or roof flagged and all those things. What happened? The risks increases. So it tells you that there's a problem with this customer, and you can basically do an enhanced due diligence on this customer, increase watch on this customer to just ensure that you don't miss things that are happening. All these fraudulent transactions are not missed through the system, and in accordance save some of your customers' monies as well. So I think most of the things I've mentioned here is basically very much streamlined into transaction. That's the customer data or the customer transaction, frauds from the customer transaction. There's one other new feature that we were actually looking at, and we already have it, that is user journey. So what does this do, right? We know that most of the frauds, they come from different ways, which is, example, people using multiple device ID, trying to log into someone's account, pushing money without without even the person's knowledge, or maybe getting data that is getting people's login and using all those things. So what does this do? This tracks all these actions and is able to pinpoint when a number of devices are being used from the same location, meaning that this is not possible that this customer is trying to transact from these different devices or different locations at the same time. So these are like integrations that Adhere also helps you to do and also helps you to automate as well. And for the fraud detection, there are patterns or there are things required for it, especially when it has to do with the machine learning. I also mentioned very specifically, for the machine learning to function adequately, it needs data. And also the type of data is also important. What's the type of data you're giving to it? So it could understand, one, how does your company function? How is the information processed and everything? And this is also where the case management, which is one of the requirements, come in, where maybe the fraud unit or the compliance unit, depending on the team that looks into it per company, can literally go and look at these flag transactions, and they could say, okay, for the data or for the data pointed, these are false positives. Example, there's a possibility that once you start using Adhere, or one of your customers start using Adhere, this is when the system, the AI, start learning this person's behavior. There's a very much possibility that this person has been transacting before then. Maybe they do large amount of transaction, and obviously if the system is blocking a just give, what is this person payback possibility and all that. So all this is actually available on Adhere, and it's very, very easy to integrate and use. So this is specifically in conclusion, why should you choose Adhere? Adhere is more than compliant. It also builds is confidence in a whole lot of areas, and also confidence in the fact that we know what the problem is. We have solved some of the problem, and we didn't stop at solving those problems. We are continuously evolving the solutions to this problem in order to ensure that it doesn't lag behind the evolving threats that we have in the country. Thank you very much.
Thank you so much, Anita. I would have said that she should stay behind to answer your questions. However, if anyone has any question on this product, number one, there are leaflets about it on your table, so you can pick it to read more. You can contact them through the leaflet. You can see her on her table. I'm sure she'll be glad to tell you more. And if you want my own payment to be full, please just subscribe from here. Anita, am I speaking your mind? They should just subscribe from here, and you just complete the deal before Monday comes. Yes, so that's that about that. Thank you, Anita, for telling us more about Adhere. Everybody here would adhere to it so that we don't get caught, unguarded. We need to ensure that everything is on point. Thank you so much. Yes, for those that had promised gifts, you've gotten your gifts, yes or no? Confirm. Confirm now. Father Christmas is still here, distributing from table to table, and I think I'll do some few more questions now before we go into the next session. Please still let's wait. Please still let's wait. Everybody's about going. All right. So this is it, right? Even before we go to the next panel, I think we should have a short break. I'll confirm. When we'll have a short break in some few minutes so that we network. We have some drinks. We have something to nimble on. And from there, we will take it further. But as we are getting prepared for that, let me just give you some few questions, just some few bonuses, and we'll move on. Please remove the odd one out. 4 of the things that CBN baseline expects an automated AML solution to do. Sorry. Which one is not? I read again. Please remove the odd one out. 4 out of these are things that CBN baseline expect an automated AML solution to do. Which one is not? The first one, real-time sanctions and politically exposed persons screening. 2, automated generation of regulatory reports such as SCRs, SARs, and CTR. 3, guarantee a 0 false positive rate. D, risk-based detection. Which of these, out of these 5 options, there is one of it that is not right? Any answer? Okay, I'll give it to you, sir. C, that's correct. Please, let's give him a round of applause. No regulator anywhere asks for a 0 false positive rate. You can even see the word 0 false positive. Only that person, because it's not achievable, and anyone promising it is selling you something which is actually asked for, is explainable alerting and calibration that is proportionate to size and risk profile. The realistic goal is fewer false positives so that any analyst can spend their hours on the alert that matter. Adhere reports a 40% reduction on that measure, and that's a capacity argument, not a perfection argument. Thank you. All right. I'm still at work. Few more questions to go. Okay. Let's go for the break first. When we come back, I bring you more. Let's have a short break now. Thank you. Okay. Sorry for the break in transmission. Please, let's the first row go first. We want to make it a little orderly. We'll do the first row, the second row, then we'll do the third set of tables, please. Thank you. DJ, please give us some light music. Thank you. Okay, DJ 2 is on break. Thank you so much. Thank you, DJ. Thank you, DJ. Thank you so much. Please, let's come in. Let's settle down for the next session. You know, it's already a wet day. And for people who listened to the news this morning, you would have heard that something happened around Kara on Lagos-Ibadan Express Road. There were some multiple accidents. So let's make the best use of our time so that people who are still, you know, some people are going to the mainland. Some are going to the hinterland. So for people going into the hinterland, they can have a smooth sail back home. Please, let's come in, let's settle down. I'm sure that we've had good times networking and meeting people. Please, let's come in. Ushers, please direct people back inside. So, the charge to adhere had been made. So the question to keep asking is, have we adhered? So it's left for us now to adhere. But you now do adhere by smart comply. Please, let's celebrate ourselves again. We are adhering by smart comply. So for this panel session, it's going to be another serious one because we'll be having two senior government people again on it. So what it shows us, with the number of people we have from government today on these panels, and even the keynote and everything, is that security is something that is on the front burner for the government itself. So before I would like to introduce the title of this next panel is The Fraud Paradox, Synthetic Identity, App Fraud, and the AI versus AI defense. If I will speak it in today's parlance, now that one week may pass. So AI, they fight AI now, ba? No be so? So AI is fighting AI. So who will now mediate? Who will stop the fight? Adhere, ba? All right. So Adhere can identify and it will stop this fight. I read again. The fraud paradox, synthetic identity, app fraud, and the AI versus AI defense. To moderate this session, I have in the room somebody who works with a global critical digital infrastructure company. I have Olajumoke Rufus, the head of marketing for Vertiv. Did I pronounce it right? Yes. Please, let's celebrate her as she comes. If you know Vertiv, they are all over the world, not just in Nigeria. Also in the room, I want to invite Kehinde Omotosho, the head of engineering, Payaza. Thank you. You are welcome. Moving forward, I want to invite Mr. Ibrahim Shazali, CFC, Director, Fraud Risk Assessment, EFCC. Please, let's celebrate him. Because I'm so sure that as he is, from the door, he can start assessing our faces to know who exactly knows about anything finance. And also, it gives me pleasure to introduce Mr. Bashir Abdullahi, Assistant Director, Cybercrime Lab, Nigerian Police Force. So, I'd like to add that the Cybercrime Lab sits within the same national cybercrime structure, the keynote speaker directed us to. So we'll be having them now. Mr. Bashir is on his way. Maybe we'll give him some few seconds to join, and we'll take the discussion further. Don't forget, I still have my goodie bags, right? So if you can answer my questions right, you get what? You get some goodies. All right, let me hand over to you. I think there was Mark. Yeah. Alex.
Hello everyone, good afternoon. So we're just waiting a few seconds for our panelists to join us up here. And also to give you time to finish your food, because we're nice. I'll just kick off while we wait. Once again, you're at the Adhere Compliance Frontline Forum 2026, and it's great to have everyone here. We've heard the keynote speech, we've heard, everyone speak, we've heard the first panel session and also the unveil of the product, so we already know why we are here. This panel just further complements what we have been saying so far. Once again, my name is Olajumoke Rufus. I am the head of marketing Central Africa at Vertiv. And basically what my organization does is critical infrastructure solutions. So we build the racks that houses the servers, the cooling systems that go into the data center. So I find this panel very interesting because while I'm very used to the hardware part of security, I am not used to the other side of security, and that's what we're going to be discussing today. Like I said earlier, this second panel session would be discussing the fraud paradox, synthetic identity, APP fraud, and the AI versus AI defense, prepared we're going to be joined by these two, and we're waiting for one more person. Great people. He's the only one that is going to be representing the payments gateway, so I know that most of my questions would be directed to you, and sir, you're going to be speaking on the defense part of the fraud paradox. So basically, the better we become at preventing fraud, the more sophisticated fraudsters become. Every improvement in our defenses pushes attackers to innovate, and that is the fraud paradox. So basically, the more we become sophisticated when it comes to fraud defense, is the more that this, should I say, bad actors become more sophisticated and they innovate when it comes to attacking those defenses, and that's what we're going to be discussing today. I would start with Mr. Kende here. I'll start with Mr. Kende from Piazza. And my question would be, when you think about this fraud paradox, which I just discussed, do you believe technology is currently giving the advantage to fraudsters or to the defenders, and why?
So, in the history of time or history of finance, as we have it today, there has been a consistent and a repeating pattern which focuses on the attacking side and then the defending side. The defending side is always going to be launching attack. The attacking side would always launch an attack, and then the defending side would always protect the system. Technology is an enablement, right? Enabler. And the problem is that for every invention that humans have created, there is always the negative use of that, enabler. One of them that we have today is technology. And the problem is, as we continue to build strong systems, the bad actors are there, always finding a way to break that system down. It happened in the time past, like we have seen in wars and kingdoms being conquered, right? You have your own city and your kingdom, creating your strong forts, creating your armies, and designing your security system. Meanwhile, the other parties are always planning how they can actually attack you, what are your weak points, and how to infiltrate your system. And that is what we have with technology today. As we continue to advance in technology, build systems, release AI models, and all of that, the attackers or the bad actors are also finding ways to utilize, these systems to know how to penetrate. Earlier this month, or I think the last month, Anthropic released a model called Fable 5. And immediately, within days, it was shut down. Why? Because government agencies were worried about the capabilities of this model. It is at an astronomical rate. It means that what is possible for an attacker to do now is very, very, very high, very, very scary. And, while we are sleeping, we have built a system, the transactions are going, everything is happening. While we are sleeping, the attackers are actually out there perpetuating different kind of attacks. And like the IG said earlier, the more money they get, the more sophisticated they become, because they get new devices, new infrastructure, and new systems to make sure that they're able to break your system.
Thank you very much for that. And please welcome our third panelist, sir. Mr. Bashir, you owe everybody here a bottle of Coke. Do you all agree? Everybody in agreement, say aye. But welcome, sir. We're happy to have you. We're happy to have you here. So I would quickly ask the same question, Mr. Ibrahim. Do you think that technology is an advantage when it comes to defense, or it's our greatest challenge?
Okay, thank you. Good afternoon, everybody. Well, sometimes in this kind of forum, I think we are all full with a lot of theories. I'm not here to teach you what is AI, how do we defend AI and other things, but just as a matter of small introduction as to how we started this journey of investigation. I'm almost 20 years investigating here as an investigator in EFCC. Now, and my experience over time will show how this thing evolves up to where we are now. I think sometime 15 years ago or so, as a young officer, I was nominated to represent the commission in a meeting at NCC. Then was fraudsters. A fraudster will have more than 20, 30 SIMs that he'll be using at that time to perpetrate his fraud. Now the question is that how do we curtail that one? So there is need for at that time the commission, Nigeria to agree for a SIM registration. So as a young officer, I was there, and I did not get prepared. I don't know what I'm going to even see at that meeting, but I have to be there. Now, when Anes Nduke asked me, what do you want to offer, Ibrahim? You are here from EFCC. What do you think? Why is it there is need for us to have SIM registration? Now, I just give me an ethical scenario of a case I investigated at that time. Someone had, we arrested somebody with more than 20 SIM cards. 20, and he numbered them from 1 to 20. Each of the SIM card, if you bring one of the SIM card number 10, he will tell you the name of the SIM card and what he is using that SIM card for. He will tell you that this SIM card is a, number 10 is a clearing agent. Number 5 is secretary to the bank A. This one is the chairman of CBN. So many things. And at that time, he is using one phone. That phone is a China phone that he can always change his voice from a male to female. At the comfort of his room, he will call you and tell you that he is calling from so-so bank, that please, he need to discuss with you. Please hold on for my MD. He will change to another SIM, and he will call you with another number and talk like a female and say that, please, my MD said that he called you now. Please wait for 5 minutes because he's in the meeting. That's how he will swindle you up to the time you will part with your money. And we arrested him. So you can see how the trend transferred from SIM, and later when there is SIM registration, these bad guys drop that and start using what we call synthetic identity now. Now, the question is that after the banks, what they rely on now is KYC. Still, as a matter of KYC, during the course of our investigation, we realized that time, before this advancement of AI and the rest, the bad guys will go to a line and go all through and see where there is symmetry. They will give you an address. They will go to the bank and open an account with a number that is an address of a symmetry. I have seen a lot of that. We'll be looking for mandate file, mandate card. We'll be tracing the account, the detail of a suspect. When we go there, we'll just see a symmetry, or we'll see another school. That also, we handle that one. The next aspect is that now we are faced with what is called the AI now, the AI. Now, I remember also when I attended one particular program, the FBI official said that everybody in the room should close his eyes and attempt a crime of his own. Just close and say that I want to attempt a crime. Then he gave us 10 minutes. After that, he said, please, somebody, sincerely speaking, one of you should raise his hand and ask me what he has attempted to do. And one raised his hand and said that he just imagined that he is penetrating into a bank. He has succeeded in penetrating their server. He has succeeded in transferring $1 million into a particular account. He has succeeded in getting the account that he has transferred. And now he's just at the level of thinking of how he can now get that particular value back to him. So that is exactly what I should expect at this time. All the financial agency, a financial institution should be doing now. Think like a fraudster and go ahead more than that, more than the fraudster. The only best way you can beat the fraudster is that AI, of course, it can be both positive and negative. And the best way you use it as a positive side is that there's, prior to that, there's also what we call an ethical hackers. In the UK, they used to do that whenever there's any software, you introduce, let's say, internet banking. You bring that ethical hackers to look into the way they can penetrate it by all means. If they succeed in penetrating, then it means that that product has a lapse. Then they can do it. I know one of my teachers is also an ethical hacker worldwide at that time. So that is how we should be looking at the AI and see how best we can integrate it into our own system in such a way that we are ahead not only until when we allow the fraud to this. So I've said so much.
Yes,
and
yes.
as a risk assessor, the only best way, the best institution is not those that are always front risks. You reported a lot of risks. The best way is how you can bring a brick wall to how best you can reduce that number of crime. That is what will be the best. And AI is the best tool to do that. And there are so many things to say, but let me just
Thank
allow
you
at
very
this
much,
level
sir. I
to-
believe I have
Thank
a
you.
follow-up question before I go on to Mr. Bashir. And you spoke about SIM registration and how we was able to curtail
Yes.
this to an extent.
Exactly.
But you, in that same vein, you also mentioned the synthetic identities.
Yes.
Which are built to pass the KYC, which is the Know Your Customer.
Yeah, exactly.
From a security seat, what actually catches them? Because from what you're saying, there are still loopholes. So once you close one, which is by the SIM registration, we have the synthetic identities. What exactly can we do to close this loophole?
Well, the synthetic identity, there is no any human parameters that can detect 6 at 6 synthetic identity. The best option is also to use AI in identifying the identity. Because it is only AI that can give you pattern as to how exactly this particular individual is either synthetically done or it is something that is virtually. So the only way is to integrate AI and make sure we spend a lot of money into our AI monitoring device. So instead of us to always look at the facial recognition and other things, let the AI do the work for us. And the only way is to integrate both the data we have and the AI. The only challenge we always have between the bad guys and the good AIs, that's what I mean with the positive AI and the negative AI use that. For the bad guys, it's easy for them to sit down and say, let me create a fake name, NIN, facial recognition, everything, and it goes. But for us, we need to integrate a lot of data for us to detect that. We need to have a complete database integrated, interwoven into one particular place so that the AI will rely on that data to verify whether, yes, the NIN is correct, the other numbers are correct, but the only difference is the facial recognition because based on the data we have. Of course, one of the challenges, which I believe is one of the issues, is the issue of data. Up till now, if we don't have even our census data, it's going to be a serious issue for us, for the AI to clearly say that this space is not for this person, because there is no complete database that the AI will rely in trying to synchronize and critically examine the data and say that this one is synthetically done and this one is synthetically manufactured, or it is the correct data that is there. So that is the only one of the challenge. Because for AI to integrate and do well, it means it must have NIN registration, CAC registration, NIMC, all other NFIU, all other bank verification that you feel that it has to be integrated. And of course, AI is just like a garbage in, garbage out. You must also structure it in such a way that it is only through this process that it can give you exactly what you really want for it to go, so that it can go ahead of whatever happens. Ordinarily, in the normal IT session within the banks, is that you mention that when there is any transaction above so amount, it will trigger. But AI can go in an advanced way in such a way that it can trigger either a GPS location that this particular customer is being known to always transact in Lagos. Why is it suddenly there's a transaction coming in from Kenya or from any other place? So AI can automatically trigger that one and say, no, there's a red flag. And that is more faster than humans. Ordinary human being will say, no, he might have traveled to Kenya, that's why he's transacting. But this one, it will trigger and stop it. So the essence is to always stop the risk, not to allow the risk to happen until we now keep on running to other security agencies and see how we can recover the fund that was diverted or the fraud that has been committed.
Thank you very much, sir. So, Mr. Bashar, it's still the same. It's still the same question. So far, do you believe technology is currently giving the advantage to the bad actors or to the defense?
Thank you for this question. And I apologize for being away when the session started. This is because today is Friday.
Yes.
And I suddenly discovered that I can't go to Friday prayers. So I decided to go and pray and come back. So nobody is getting a bottle of Coke. The fraud paradox, looking at AI, technology generally, as a pace setter or an instrument that makes life easy for users of this technology, and also at the same time it way into 70 accounts. They are not even doing 1 million. They do less than 800,000, 400,000 structured payment in such a way that the triggers will not be able to identify what is going on. And then as an investigator, how do you pursue it? So if you don't have technology at your disposal, there is no way you can do it. Before you know, the money has been converted. So at the collection stage, the distribution stage, what they do next is to layer it. The layering stage involves a lot of activities. One account sending to many, and then the same account sending to other accounts until they get to the conversion stage. At this stage, money moves from the traditional banking network or institutions to crypto environment. It moves out. And what they do is not only, is not the traditional cryptocurrency fraud. Now they use P2P. I don't know you, you don't know me, but technology has brought us together. You look around you, and then who wants to buy, who wants to sell? You just sell. And before you know it, the money moves out. So even when investigators arrest this cryptocurrency dealer, who ordinarily is not a criminal, he's not a criminal because he wants to sell a product and somebody bought it. If you eventually arrest him, thinking that you have arrested the guy that consumes the proceeds of crime, you will be shocked to the marrow that this person is just a businessman selling, just like selling granite. Say, I sold my money. I sold my crypto in exchange for this money. Meanwhile, this money is proceeds of crime. But traditional investigation technique requires tracing the proceeds of crime to logical conclusion. If I'm selling a house, somebody steals money and comes to buy my house, that doesn't make me a criminal. Maybe the only thing that investigators will be looking from you is the requirement of providing information. Have you kept information? That is the anti-money laundering strategy. Know your customer. Who did you sell what to? At what time? Have you been able to get identifications of this person so that in case there is such situation, you will be able to provide to investigators? This is the face, this is his ID, this is where he stays. But they don't even have this because it is P2P. The only thing that they have is they may show you the account from where the money came from. But then that account too might have been created through synthetic identity. So you trace it to cemetery like my colleague here said, or you trace it, there was one we did here in Lagos. We trace and behold, the place happened to be an Islamic school. So the crypto dealer will only give you the ID, the transaction ID. You now have to write to another jurisdiction asking Bybit or Bitgate or whatever BASP to provide you with the details behind this ID. By the time you get the information, I mean, the money has gone. It has gone through layers and through bridges, and then conversion from one cryptocurrency to another. So there is no way investigation can succeed without technology. So just like technology is good for people that use it, it is also used by criminals at the same time. That is a paradox. Unfortunately, this is where we find ourselves in. So using artificial intelligence definitely will assist us in faster ability to analyze what is happening and then and give us a way out. For example, where I work, the National Cybercrime Center of the Nigeria Police Force, I happen to be the head of the digital forensic lab. Now, you take digital devices from suspects. The intention is for you to carry out extraction and analysis of information inside that phone. A typical tool may take like a whole day to extract a very heavy data from the device. Just to extract. The next stage is to analyze. You ingest, then you analyze. Now, analysis may take another 1 day or 2 days. In a situation where you have like 100 devices recovered in a crime scene, how do you do it? How many days will it typically take you? So what is needed here, we recently discovered, and we are working on it, is that you extract and then you build an artificial intelligence solution that will quickly analyze within seconds and give you the results. Thank you.
Shy. So I'm back to Mr. Kende because we've really spoken about the attacks and the defense of AI. But for you, someone who is involved in payment gateway platforms, I want to understand, what does a real machine speed defense look like and where does it fail?
That's a very interesting question. And I would like to paint the scenario from an engineering perspective. Before now, we are stuck with static onboarding parameters. You collect the BVN, you collect the CSE, and then, all of that, and then you store it on your system, and then you conclude that you have completed a KYC or a KYB on an individual or a business. But today, when you subject some information to AI, artificial intelligence, it crunches terabytes of data in minutes. That is something not possible to humans. Now, when attackers come to the system, right, you tell your customers to do a liveliness check, open your mouth. I saw a very funny post recently, and it was mimicking the one of the institutions' liveliness check. And it says, brush your teeth, sleep, wake up, open your mouth, cry, and all of that. This is an advanced liveliness check, unlike what we have before that. You just look at the screen, and then the camera scans your face. But now, with speed, synthetic identity now comes into play. It means that at the back end, an attacker can actually block the camera of the device and automatically inject a synthetic identity into the system. So before, you are relying on your device's camera to open up and then start looking at your face and trying to get the information. Let me just play a scenario. A bad actor is coming into your system. He has provided a digital passport, he has provided a BVN, NIN slip, and all of that, and everything is a synthetic identity. But a platform now wants to verify that account. And the normal way is, okay, turn on your camera so that I can see that your face, through a liveliness check, is the same as the document you have provided. But this time, the attacker now chooses to blind the camera, so the camera is not booting up any longer, but a synthetic feed is being fed into the system. So the synthetic identity that has been created now matches the synthetic document that has been provided. At this rate, an attacker can push thousands of requests to your system or to an institution in minutes. Before now, the attacker has to like create another identity, manually create a PVC, an NIN slip, use Photoshop or whatever, and then present to you. But now, with the use of agentic AI, the system is just creating a lot of identity on the fly and then infiltrating the system. So you can see the problem that speed introduces. So a bad actor does not have to sit and worry about how many Photoshop identities he can create in a day, because he has employed an agentic AI that does that on the fly for him. So speed now becomes a tool to the attacker, even though on your end as a business you have also safeguarded and implemented an AI system. So this way, you know, we have to now bring human into the loop in some cases. Another problem that now happens with that speed, where that speed really fails, is that a bad actor uses synthetic identity 100,000 times with different institutions. Why is a bad actor, you know, gaining success in all of these attacks? Because institution A has refused to share data with institution B. So 100,000 successful attack on institution A, it is just a matter of time. It is coming to B. Then somebody just perpetrated a crime here in this bank, and then he walks across the streets and does the same thing because there was no real-time data check. So because of data in silo, speed is still going to fail because we don't share data. So it's not about bringing the best AI system to defend and bringing the best AI system to offend and all of that. It's about when all of this defense is happening, when you flag those synthetic identities, are you sharing it with the appropriate authorities and regulatory bodies so that they can also share that information with other institutions, so that if one attack is successful, you would have prevented it for 1,000 other institutions. Thank you.
So I think I will go to the bodies now that we're referring to. Is there anything or measures or policies that have been put in place for financial institutions to share this, should I say, successful attacks in real time? Not waiting a month, not waiting for 3 months, not waiting until maybe a customer starts screaming or sending 10,000 emails to CBN. Is there a policy that's been put in place for these financial institutions, whether microfinance, whether payment gateways, to share information with you or with your organizations in real time to curtail attacks or more attacks?
I believe so, especially through one of the popular institution we know, NIBS, right? So at any particular point in time, institution can share data. I mean, bank institution, fintechs, MFBs can share all this fraud data with NIBS. But like it was discussed earlier, a lot of organizations also want to protect, you know, their name, their identity. They don't want to be outed as the one that was hacked, or the one with the loophole, or the one with the problem and all of that. So because of this quote-unquote shame, other institutions pay for it. They suffer for it. And then the costs really, most of the time, goes to the customer. I had to abandon one of my bank accounts because I just woke up to a malicious debit. I went to the banking hall to complain, and they said I have to bring an arm and a leg and this one. I just forfeited the account, the balance and everything. I just decided I was not going to that bank anymore. So if this kind of information has been shared through, you know, bodies like NIBS, other people would have been informed that, okay, there is this synthetic account that is tied to this BVN, that is tied to this NIN, and then we have to block all transactions that comes through it.
I think it works. Okay, thank you. So I have a key insight here that says the CBN has issued draft guidelines for authorized push payment fraud. A customer may be reimbursed if they were deceived. reported within 72 hours and did not act negligently. Liability can be split between the sending and receiving institutions, and an institution that failed to flag a suspicious account in the chain may be held fully liable. So now I want to ask Mr. Ibrahim regarding what he said. He said he had to abandon an account based off of, fraudulent activities on that account. And this is what CBN has said so far. So my question would be in two folds. One was a question which I asked him, which is there a policy that ensures that these financial institutions immediately report any synthetic identities or loopholes that will put their customers at risk? That's one. Two, on the authorized payment push fraud, which is what I just read, when the customer authorizes the transfer, who should carry or bear the loss?
Well, should I start from the up or the down? Well, to the best of my ability, I don't know if there's any repository of data as regards to issue of synthetic fraud and other things. In part, if there's anything at the investigative part that we are suffering now is how you can, at the one push of a button, you can get this kind of data. The sharing of data among even the banks themselves, networking themselves to bring out all these cases of fraud is another thing altogether. You can never have a exact figure of the fraud per year that happen in all the banks. Sometimes the banks hide in this information thinking that the more they say that my bank this year I have received this number of cases of fraud, people will assume that that bank is not very stable. So they shy away from bringing out this kind of information. But the best option, if any bank will assume that there is no anything, no liability, nothing, there is this issue of synthetic fraud within this, my bank, within so years, it's easier that you publish it and you share it with other banks. That is how some other bank will now look at that particular terrain and see how best they can guard against it so that they cannot also be victim of such type of fraud. So the sharing information within security agencies, banks, and all other agencies, fintech and other things, also very, very challenged within the security cycle, and that's exactly what we are suffering. I don't have an idea that there's any repository of data that you can go now and have that one button that can give you all this information. Now, you also made mention about authorized push payment fraud, which you have said that CBN said that there's a liability on either the customer or the bank, the paying bank or the receiving bank. Now, as a risk assessor, there is no way you can take liability to someone until you establish that, yes, he's liable to that. What am I saying? If a customer, for any negligence, decided to allow his account for a push payment fraud, of course, the authorized push payment fraud, for just clarity, is that once someone call you and say that he's calling you from a bank, from your own bank, that he's your account officer, that please, because of today is Friday, and we really want to quickly transfer some money into our own one particular account so that we'll not have issues, because we are trying to do some services within weekend. Please, I'm sending you OTP now. Just if you receive that OTP, send it to me, do that thing, the whole of your money will be transferred safely, so that by Monday everything will be okay. And you accept it and do it. Of course, it is you that authorize that transaction. Liability lies on you because you are the one. But at the same time, in the investigation cycle, we will say that you are swindled to do that one. So automatically, there is no way we can say you are liable because you are just like a 419 or something that is you don't have an idea on what is going to be at the end of the day. But at the same time, if banks always keep on sending you text that you should not release your OTP, you should not release your any number, any banker should call you on phone and say you should do that. Please dissociate yourself in any way from doing that one. So the bank can rely on that you ignore their own instruction and go ahead and do that one. Of course, that liability will also be balanced between you and the bank, saying that you have already bypassed them. Also, the receiving bank, if the banks that receive such type of transaction, they also receive such funds, a normal account, they saw an account coming in, money coming in at different tranches and quickly transferred out, and they did not report it. Also, that receiving bank will be also liable. So the liability depends on the risk analysis and looking at exactly whose negligence create that particular thing. Of course, like what you said, if you rush into a bank, like now, I just saw an alert of 1 million out of my account, and I quickly called my account officer that I saw an alert of 1 million naira. I did not start this transaction. I don't have an idea. Please quickly stop my account now. And for some obvious reason, she's saying, or he's saying, no, please, don't worry. You can do it online. Dial star, blah, 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 blah. You can stop it. I'm still insisting that, no, you are my account officer. Stop this thing. And later, I saw another 1 million. Another 3 million. And all my account is so automatically, by reporting to CBN, that shows that the negligence is directly from the bank. And that bank must take responsibility. Even us as an investigator will see people coming to report to the FCC that, yes, I have my account this morning at night. I dropped my phone. Early in the morning, I just saw alert of all my account is swept out. So I have to go to the bank, what happened, how it happened. Sometimes we have to push it to the bank that they are able to do that. But when we deeply investigate and realize that somebody sent you a WhatsApp call and say, please, we are going to have one meeting at around 2 a.m. tomorrow. Your school, your child is going to have a meeting with us. So instead of you to come for open day, that's what they call the open day, please, you can also hook in through this WhatsApp. You accepted it and accept a link, and after the link, automatically your phone will become blanks, and later you did not see your account. That one automatically shows that there is really negligence from side. So as far as I'm concerned, the policy is nice, but at the same time, that does not mean that liability should fall directly on the customer or the bank, but it has to weigh in and see exactly who will share. Sometimes it will be 50-50, sometimes it will be both, and at the same time, it can be even the customer negligence, because this thing has to be something that is keep on evolving over time. And banks, of course, are trying severally. You see a lot of messages that do not release all your bank details to anybody by way of either phone call or text message or whatever. You have to go to the bank if there's anything for to verify. So I think that at that level, I don't think there's no liability that will fall within. So I'm just trying to balance up. Of course, the liability, when you are doing risk analysis, there is high risk, low risk, and medium risk. Depending on the risk associated to the fraud at that time, that will determine what action should be taken at that time. Thank you.
Thank you very much, sir. Still speaking on this, I want to ask Mr. Bashir, what would real-time fraud intelligence sharing between institutions take legally and practically?
Now, real-time intelligence sharing. Intelligence usually come in the form of either somebody reporting to you personally, or you are getting intelligence from some of the institutions, either the financial institution itself or the Nigeria Financial Intelligence Unit. Now, I will give you an example. In late 2025, around December 27, 28, the former director, NPF, NCCC, AIG Ifeanyi Henry, was in his village enjoying his Christmas. So a neighbor ran to him and said, Oga, I've been scammed. I've been hacked. So he told him the story. He asked him to write a petition. And immediately, AIG called me I said, Bashir, I know you can handle this. Please do something and help this man. The man lost 2.1 billion naira. The account was emptied. This is a businessman living in Ghana. He does his business in Ghana, but came to Nigeria during the Christmas. So, and this thing happened. And just like Mr. Ibrahim said, he woke up in the morning to see that his account was emptied. So this is another form of intelligence. Direct complaint from the victim is intelligence. If he doesn't know what to do, then he will be writing to CBN, to this, to that. Before you know it, the money has disappeared. And immediately, what I did was to share this intelligence with the financial institution. That is the bank where his account is domiciled. I asked them, look, check this account. What happened there? Let me have the instruments. And they immediately shared the instrument. There was no any documentation. As far as I can remember, there was no any letter written to this financial institution. But legally speaking, like she said, legally and practically, legally speaking, a documentary correspondence is required between the law enforcement and the financial institution. But where there is trust, which we are discussing today about the trust frontier, when a trust is established between these two institutions, law enforcement and the financial institution, you can actually work together and collaboration. You can work together and then you can do documentation later, because we know that financial crime, especially technology-enabled financial crime today, takes place at the twinkle of an eye. So rapid response is needed. And immediately I did that, they sent the information back to me. Yes, this is how the money was dissipated into various places. And I immediately started looking for those institutions. These are not banks. They are companies that supply commodity. And luckily, because of the network, I was able to call the chief security officer of one of the companies, and that one immediately went to the finance department, said, that money, if you are not supplied this commodity, please hold it. And then the same thing to the other institution. And by the end of the day, one of them was very adamant. You don't know me, I don't know you, you can't just call me and ask me to do what, ABC. I say, okay, you want to know me, okay, you will know me. And I was acting as the director then, because the deputy director was on transfer. Then my director was on holidays. So I immediately wrote a letter asking him to report for interview. And he immediately called back and said, oh boy, which one now? We are just discussing. I was advising you, I am not the owner of this company. I said, but you said you want to know me. Come here now, fly in and see me. So immediately they had to stop the money, and the documentations were done that assisted us to recover this money 100%. But then what is required now is not just for us to say we are happy, we have recovered the money, and then sit down there. The next thing is attribution. Who did what? What actually happened? And alongside this information that we received from this individual, and then the activities between us and this financial institution, we were able to share operational knowledge immediately across the platform. I am a member of the Chief Information Security Officers of financial institutions. So we talk. And I immediately informed them, I informed the management, and they distributed this information. And behold, such kind of fraud took place across the banking institution. A lot of people suffered this kind of losses. And what they do is transfer within the same institution. Let's say Bank ABC account holder defrauded, and Bank ABC account holder benefiting. So there must be a loophole within the same platform. And this will help this financial institution to do a remedial action immediately. Otherwise, it will go on and on and on. Thank you.
Thank you so much, sir. Our time is far spent, and I'm being told to wrap up. And there was something you said, and I'm glad you did, which is that you're a member of the CISO Association. And for just to wrap up, I would ask you, what is that one advice you can give to every CISO in this room regarding fraud attacks?
Well, the platform of the CISOs is very, very germane, is very, very important. They should maintain it, not just maintain it, they should be doing 24-hour conversation between themselves. What is the new thing today? Because fraud is evolving. Especially cyber-enabled fraud is evolving. Seriously. We have seen banks losing billions of naira. Billions of naira. When they attack, a bank loses 2-3 billion naira. And the same thing will repeat itself the next week. That means there was no communication between these institutions. So it is very important for this information sharing to be made compulsory. Like in the police, every day a DPO wakes up, he asks all the posts, all the black spots, give me information regarding what happened, situation report, and all of them will report back to him. Nothing happened. Area calm and quiet. So he also in turn picks his phone and calls his commissioner of police to report the same thing. Now, even where there is no any incident to report, no incident to report is also an incident. So when you say nil return, you understand? If you look at the tax law, the value added tax law, businesses are required to keep record of all transactions done. Where a value added product is sold, you are supposed to make a return. Let's say I am a restaurant owner, and every month, first of all, one of the obligations on me is that I must register. And secondly, I must render return. So even where you don't render, even where there is no return to render, as long as that business is active, you have committed offense if you don't render this report. So the CISOs should also do an internal regulation that will assist them to make sure that each financial institution reports on daily basis whether an incident had occurred or there is nil return. That way, I think we can safeguard our financial integrity across board.
Thank you so much, Mr. Bashir Abdullah. Please, a round of applause for him. Next, your parting words, Mr. Ibrahim. What is the single control most institutions are still missing, and how can they fix it?
Okay, thank you very much. Well, from my portfolio in my commission now, I'm the Director of Pro Risk Assessment. And what we really think is that we want to national advantage to what I'm still doing. What we are doing is that my chairman said that we should not always be prosecuting. Why not let us be proactive now and see how best we can now see how we can assist organizations not to be susceptible to fraud, just the way we are doing now, saying AI versus AI. What am I saying? We decided to say, let us go to ministries, agencies, and departments and see their process and see what are they doing that is making the process to be extremely susceptible to fraud. There are so many activities there, but we say, okay, let us just take one aspect, which is supposed to be clearly one of the most serious issues within the MDAs, that's procurement fraud. We realize that all the procurement within MDAs, there are some issues associated with that procurement. So we decided to segment all the MDAs so that we'll now go to a ministry, look at the procurement process from beginning to the end. This time around, we are not saying we want to look at your procurement and say you did wrong. No. Let us look at your procurement process. Let us see part of the process that you feel you are not doing it correct, and we correct it. So that we are trying to be proactive than reactive. So that's exactly what we are doing now. And with this AI now, I think I will now get this advantage to say that, okay, let us start implementing AI process even within our procurement process within the MDAs. How do we do that? Let us see the loopholes, because what we normally do after see all the loopholes, from the tender to open bid to payment to everything, if you see anywhere you are not doing right, we'll tell you that this is how you will do it. So with this process now, the best option is that all the agencies that we see any loophole, we will now say, okay, let them bring sort of a nodal officer that will be dealing with. We will tell them that this is what you are doing wrong and correct it, and we will be looking at the process quarterly. You come quarterly, you will now look at exactly if you are complying with those things that we feel you are not doing wrong. So with this, we have really bring down the number of cases as regards to procurement fraud. As to your question, the best option is really to go into AI in this aspect. All agencies and all fintech, banks and the rest should always adhere to. So it is easier for banks to now, let's say, spend 500 million to protect themselves against paying 8 billion if you have found wanting as per the CBN. Now it's better for you to this is going to like a wake-up call to all the banks to start thinking that protection is much very important, that if they are now shying away from protection, it is now going to be their own thing to now look at it and make sure they protect their data, whatever they can do, especially the AI-enabled process. I'm sure the Adhere now, you have a lot of customers now, because if banks will be paying all these penalties, they will feel that the best way is for them to quickly rush to Adhere and see how best they can now protect their process, so that they can not fall victim of always paying back customers when there's any issue of negligence in their own part as regards to any fraud that is perpetrated in customers' account. Thank you.
Thank you very much, Mr. Ibrahim Shazali. Please, a round of applause for him. And finally, for your closing remark, Mr. Kende, I want to ask you, where is the payment gateway most exposed, and what would you advise a CISO to fix first?
In the payment industry, we have a lot of touch points. The onboarding parts, the transaction leg. For most of us, we have the compliance leg or the automated fraud tool that we have also implemented. But in all of this, right, there could be some weak points that is exploited more than the others. What do I mean? A bad actor may be sitting in your system for months. Their intention is to create a legitimate account, do the normal KYC onboarding and everything, and start acting like a normal actor so that they can get used to how your system works, what buttons to click, what user experience they can exploit, right? If you do that at a human speed, that is considerably slow. But today, you have tools like, for people in the engineering field, tools like Playwright. What does Playwright do? It means that you can write instructions. So the system now behaves like a human being and then goes to the platform using the instructions you have given, carry out actions and activities as if you are a human being, and then it works. So imagine as a human, it takes you maybe a month to do your reconnaissance, your gathering, your finding out the loophole of the system. I mean, even by using it. Now imagine if you spin up 100, 1,000 agentic AI to do that for you. It means that these things can spin up immediately, start up emulators or simulators, and then using the system as if it was you. And then coming back to report all the things you can exploit as a genuine user to you. So before now, 2DS was the norm. By 2DS, it means two directional authorization of transaction. It means you, the user, for example, a card transaction, you are the human being, you know your card number, your security, and then your expiry information. You key it in on a system, and then the institution verifies that transaction on their end. For example, if a bank issues me a card, when I do a transaction, I key in the card information, the institution verifies the card information and approves it. But now, it went to 3DS version 1.0. What does that mean? It means that in addition to my knowing my card number and then my institution verifying that transaction, we now have to add what kind of device am I using, what is my IP address, where am I doing this from. So that was now added into the loop to make sure that that has been curtailed. But now that is not sufficient anymore. We have now moved to 3DS version 2.2, I think, or 2.0. What does that mean now? It means those information are not sufficient anymore. As an institution, you now want to know what is my pattern of transaction. Am I somebody that buys more of, I mean, do I shop fashion more? Or do I shop, yeah. So, I mean, you check my pattern and then decide if I am the one actually carrying out that transaction. So sometimes when you now see a transaction from somebody who shops fashion more, is now buying guns, then that's a red flag, right? You can flag that. So in addition to what we have on ground, behavioral spending, mobile SDK and data points are now things that we need to add into the system to block all of those kind of loopholes. Thank you.
Thank you so much. Please, a round of applause to my panelists. No, a bigger round of applause, please. Thank you so much. Thank you, sirs, for coming here and joining us today. It's been very insightful. It's been very knowledgeable. Thank you so much.
All right. Thank you very much to all the panelists. It was a very, very insightful one. Thank you so much. Please, let's celebrate them. I would like to add something before we proceed, that one good thing about Adhere is that as it's working for those in the private sector, it's also working for those in the public sector. And here again, with the way it's written, please let's celebrate her, the GMD of Smart Comply, as she comes back to stage. And the last person is Kelechi Ohalete, Governance, Risk, and Compliance Analyst, RAC Center. So why RAC Center is important here, should I say it, is one of the data centers that we have in the country. And if I'll use their word, they are open to hyperscalers. They have 5 basic. Let me leave that to you because they've not paid for advert. Right. All right. Thank you. Over to you, Tayo.
Hi, good afternoon, everyone. Good afternoon, everyone. Yeah, I know we are tired, and sorry, is this my mic? Okay. Okay. So I know we are tired, and I was telling Francis because we're sitting together, and I said I really wonder what they want us to come and say, because I think they've said a lot today. So we'll try to make this as fast and interactive as possible. And I think my first question is to Samson. Hi, Samson. First things first. Everybody I've introduced myself to today, or I said, hey, hi. They said, oh, what's your name? I'm like, Tim Tayo. And like, oh, where do you work? I said, I would say Tech Cabal. And the face just changes. I don't know why. Is there a Tech Cabal beef in the room? Sorry, you said? Or there's a Tech Cabal beef in the room? I don't know if I should apologize, but probably after the end of this, yeah? So Samson, hi.
Hi, Tim Tayo.
Yeah. This year, over the last 14 months, the CBN has released about 17 circulars. About 17 over the last 14 months. And this is something that happens a lot to fintechs. So this is a non-technical question. Where is the weirdest place that you've been that they've called you and they've like, the CBN has released something, CBN has released something?
This one is a tough one. I would say, out with friends, usually on a Friday evening. It's usually a Friday, afternoon/evening like this, and you just hear, or you open Twitter actually, and you're relaxed, work is just closed, and then you realize another one, and then everybody's scrambling over the weekend to obviously interpret and figure out like what it means for business. So yeah, I would say just usually chilling when you're relaxing on Friday evening. Yeah, that's usually the time when it drops.
Cardoso seems to be after your weekends.
It's not only him, even from the past administration as well. It's a regular thing, Friday evenings.
So, do you think the CBN now understands how to regulate fintechs? The police is not in the room.
Twitter is trying to set me up.
The police is not in the room.
So, I will definitely give you a politically correct answer. You can see me after this for, yeah. But to answer the question directly, I think the target is a moving target. I believe that like it's sort of a well-known thing that innovation usually kind of precedes regulation. I think to a large extent, a lot of companies have tried things even before the regulation was kind of put in place. So it makes sense that regulation is playing catch up, right? On whether they are actually catching up, I think progress is being made. That's the comment I'm going to make on that. I think like you said, just even in the sheer volume of policies and regulations that have come out in the past maybe up to 18 months now, it shows that progress is being made in closing that gap between innovation and regulation. So it was just that half of the question, right? That's
you can continue. It's fine.
See me after this for my non-politically correct answer.
Okay. One of the most interesting regulations that has come out of the CBN in the last 14 months has been the updated anti-money laundering baseline. And there's been like a lot of conversations around it. Everybody has said AI. I don't know if we've all seen this skit, this Instagram reel, where people will mention the number of times someone has said AI during like a keynote speech. I don't know if you've seen the Instagram reel. I think if we've been counting the number of AI that has been said today, I probably have a lot of money in my pocket already. So I want to come to Francis. Francis, do you think, everybody has said AI this, AI that, AI this. Do you think we actually understand AI?
Absolutely.
Do you think we do?
Yeah, absolutely.
Do you think we understand what we want to use AI to do? And also, do you think that we are playing catch up rather than being in front of a problem?
So I think it's there are several parts to this. First of all, I think AI and what we are seeing is the entire world is not. So it's not just when we say we, it's not a Nigerian thing. It's not an African thing. The entire world is playing catch up, right? Because the systems are evolving faster than any of us can keep up with, right? And I even think for many of the companies who are at the forefront of building most of the systems, they find themselves not knowing what the end state could be, and even when they are done with some of these developments, they don't know what the impact is also going to be as well. One of the last speakers just spoke about Anthropic's release of Fable 5, a new version of Claude, and how the US regulations, the US authorities quickly stepped in to say, hey, no, wait, we predict that there will be a couple of vulnerabilities with this and all of that. But bringing it back home, and I don't have the numbers and I don't have the raw data, but I'm yet to find, Nigeria is a very interesting market because particularly this is one of the most popular markets you would find, one of the most popular countries you would find globally, and I'm yet to find anyone who doesn't interact with AI-enabled systems in one way or the other, right? You're beginning to see this on an individual level, you're beginning to see this even on a more organizational level. So I'm not going to say that we're playing catch-up. What you could probably say is, okay, how many local organizations are beginning to invest in this and build systems that will be more relevant in interpreting our own data for our own unique problems? I think that's an area we could look more into. But as far as playing catch-up goes and how AI has evolved globally, I think it's a more global phenomenon. And we could probably look a bit more inwards to see, okay, how can we adapt some of the standards and the tools that are out there to solve our unique problems with our own data.
A quick follow-up for you. So I read the report or did the journalist thing where you see a report, you look over it, you hear. And one key thing I noticed is the report points to the fact that there's a talent gap, especially when it comes to key personnel. What is one role that currently does not exist in the ecosystem? AI and AI role that currently, that gap that exists, I think in the next 1 year, if we don't fill that role, we're all going to be in trouble.
It's not uniquely an AI problem. The talent shortage, the talent gaps, it's not uniquely an AI problem. Okay, so let me just explain this. I was in Johannesburg recently. My work gets to take me around across a couple of cities, and I was speaking on the panel just like this in a room. And in that room, you could see a couple of people who had come from some of the big banks there, Standard Bank, First Rand, and all of them. And some of the very interesting titles you see for people in the audience are Head of Digital Assets this. Or, Digital Assets Automation that, or AI some sort of this. Now, if I were to compare, right, bringing it back here, you don't typically see a lot of job descriptions or job ads with the same things, right? Now, the question for me is, when you look at the data says that Nigeria is one of the leading markets for crypto adoption. You're seeing the digital assets adoption. In Africa, it's not even close, right? You see that there's a lot of utility going on here. And then when you compare, it's almost as though most of this is happening, but what are the underlying systems and the underlying infrastructure that are enabling this? And even for the institutions and organizations that are providing platforms that allows customers to interact with digital assets or AI in some way or the other, are they even up to the standard are they meeting up to the standard that they need to be, right? So it's not specifically one role, and it's not specifically one sector. AI is one, digital assets is one. I can go on and mention a couple of others. You could even say it's the same thing in biotech, right? But let's keeping it on topic. I think a whole lot more needs to be done in addressing, one, the talent flight, as well as the talent gap, right? We're having new systems evolving every day, new systems of money, new ways of doing things, or even and even interacting with technology, and it makes a lot of sense. It's also an opportunity for any company who is able to solve for this problem, right? It makes a lot of sense if we are able to source for some of, or rather plug some of the talent shortages at home, right? We're able to work on initiatives that enables us to plug some of this talent shortages. So it's not a one particular role or particular area thing. It's actually more multifaceted than that. Yeah.
Thank you. Mr. Umokoro. Sorry, did I pronounce it well? Did I? I tried. Okay, my apologies. Chams. Now, Chams sits in a very interesting place, very interesting company. It's a company I write a lot about, very interesting. You do a lot with identity, and there's a whole lot around digital identity in today's world happening today. Do you think that, because now we have the NIMSI Act, we have a new NIMSI Act, the Ministry of Information too is working on another one that has something around identity too. Then also the CBN speaks, and there's also identity inside. Do you think rather than regulating isolation, is it time that we start thinking about a super regulator that thinks about regulation in layers rather than just, oh, I will do my own regulation, you do your own regulation, and tomorrow, sorry, I don't want to call Paystack. He thinks I have it out for him. But do you think that it is time for us to start thinking of a super regulator that thinks about everything as blocks of the same thing, rather than of just separating like one body?
Yeah, I think that's an interesting question. But I honestly don't think that that would be a right move. I think a jack of all trades will still be a master of none. I think it's fine for regulators to focus on an area and do an extremely good job in that area. But then you have to do an extremely good job in the area that you pick. And that means being ahead of who you are regulating as much as possible. So this whole conversation about innovation versus regulation is still a thing that we need to do a lot in. Like, we hope that our regulators are utilizing excuse me, the most cutting-edge technology as well. They are as learned as the people they are regulating. They are putting all the efforts into advancing themselves, advancing the space, like understanding what is available, and then what the people they are regulating are likely to be doing, and then creating the policies that not only achieve the purpose that was initially the reason why there's a regulation coming, but also not disrupting too much, the service that the value that has been added, by the innovators on that end. So I think that how it is structured is fine. We just need to be a lot more cutting edge, if I can use that word, in providing the regulation that comes in so that the innovators are not, stumped.
Thank you so much. Although as a journalist, I want to just jump at you and just say, because the first thing you said is we need regulators that are doing a very, very good job. And as a journalist, the first thing I would say is, do you think our regulators are doing a very, very good job? Are the regulators in the room?
Yeah, I see you have a knack for putting people on the spot. I think for me, the answer I would give to you is that, again, there's been a lot of progress so far in all the effort that I've got in. But I also think that the way there are gaps everywhere, there are also gaps there, right? But the good thing is that I think that something Atlantis has done in all fields, it's democratize access to knowledge, right? And I think that just as we are having all the different professions and processes we have globally today advancing themselves in what it is each individual is doing, I think that's also happening in the among the regulators as well. So I think that so far, I would say that they've done a good job in being able to lead the spaces that we're looking into. But I think there is also a lot more that can be done, just like the way the innovators, the services that we're rendering, all have been exposed by artificial intelligence. I mean, it just cuts across board. My hope is that everybody, both regulators and innovators, they take advantage of the technology tools that we have available, and everybody, creates a better ecosystem as we move ahead.
Thank you so much. Good afternoon, Bemi. So I'm not putting you on the spot, so I'm not putting you on the spot, but like, yeah. So one interesting thing that the reports point to is the fact that it is time for us to start treating compliance as architecture. And everything the CBN has done so far this year, at least this year I know, there's always compliance somewhere baked in. Like, they will tell you to do something, it's compliance. BVN, compliance. Fraud, compliance. AI, compliance. How do we make compliance to become architecture, considering that there are a lot of builders that see compliance as a stumbling block? It's like, let me build first. When I build, then we can now talk about complying. So how do we make it a culture? No, we can't.
So I would say first thing I'll say first thing is having to have the let me come from the ISO standards now, where they say if you want to move a narrative in the business, it has to come from top management. So top management have to be involved, and they have to let the design team know that there are implications for not putting this compliance in place. And there's another word I like to say where always put security by design into your compliance. You're building a system, you know where the regulators will come for you, you know where the gaps that they will pick up on. So why not just adapt it into the build as you're building it, instead of waiting to complete it before you are actually implementing it? It makes it easier. So as you're building, you're reviewing, you are also implementing at the same time, so that by the time you are done, it doesn't become a hurdle for you or a problem like, oh, why didn't we just go ahead and just spin it? It's more like, oh, we've done all the checks, we've done all the compliance regulation, and we've also embedded security into what we are doing, so we are good to go. So I'll say the way to push it is, like I said, it has to come from the top. Top lets them push that mandate that, yes, we're pushing this solution or we're pushing this idea outside, but at the same time, we also need to make sure that our compliance and security is in check, so that when we are done and we are pushing it to life, it's good to go, and we're adapting to the regulation, and at the same time, we are keeping our organization safe and secured for the clients that trust us, and also for investors or foreign business that we want to work with. So at the long run, is more of seeing, not just building a product, but seeing the benefits, building it, and putting all those security measures and compliance measures in place, so that you can grow. As you're scaling, you are easily scaling into those different regions you're going into.
Thank you so much, Mimi. If a quick follow-up from me, because I've been hearing this since 2024, and today everybody has said it, and it feels like in another 2 years we'll have another panel and the same thing, we'll say the same thing. As the compliance master here, how can we enforce that reporting that fraud needs? Because we are not going to win the fraud fight if there's no intelligence sharing. And it's been happening since like as I said, 2024, the FCC, they were on a panel and they were saying, do it. It's 2026, 2 years after. I'm sure if I have a child, when the child is 5, child probably hear the same thing. So how do we enforce it? What needs to change?
So I would say thank you for that question, and it's a tricky question, but at the same time, it goes back to having that partnership with the regulators, and also the industries or institutions that have the first-hand engagement with these fraudulent actions that happen. Most organizations don't want to report it because it brings up bad reputation for them. They lose trust, and at the same time, they don't want people to know this is what is going on or the funds that they are losing within their business. But the flip side to it is, which we've also spoken about here, is that if there's that trust within that institution is not there, that trust with the regulation is not there, then other people fall victim to this same fraud actions because it has not been said and it has not been announced. So what I would, or should I say it's a plea now? Yes, it's a plea to all of us that are within this regulatory body, is that, like the team says, the trust frontier, we have to trust ourselves, have that forum, or should I have that segregated team where you have top leads that are involved in this, that the core holders of these financial engagements, and they're able to bring to light what is going on. And then when they are together, they're able to brainstorm and bring up solutions to ensure that they address it and it doesn't happen again. Because at the long run, if we don't have insights to what is going on real time, we won't be able to also put the right solution in place to address it. And that's why you can see CBN is pushing for, don't let it be a passive or dominant transaction monitoring you are doing. Let it be real time. Let it have the behavior analysis. Let it have the anomalies there too, so that as it's happening, you are picking up on it. And then your machine is also learning, and then you are bringing up solutions to address it. So I would say that in the long run, that trust has to be there within that forum that they are going to create, where they say whatever they say there stays within them, because at the same time, they are trying to bring up solutions to address it. And then for the ones that they want to pass out to the public, is passed out. But that trust has to be built within the industry, because if let me say a GTB now says, oh, we had this financial fraud incident that happened and we lost over 450 million naira, and then maybe EcoBank hears about it and then is using it to say, oh, did you know GTB had this? So as much as possible, they are keeping it contained because they don't want other people to know what is going on. So they need to create that forum where, okay, this stays within us, we build a solution to address it, and then we also build that intelligent network to help address it. And we have NIBS too that is helping with that, so they can also use the NIBS network to also push that narrative.
Thank you so much, Mimi. Kelechi, I'm coming to you, but before I come to you, like I'll just give like the rest of the panel something to think about that I will still come back to. I might forget, so maybe I should forget, yeah? There's something she said about fraud and the forum, and I just remembered that 2024, the NIBS and EFCC, they were talking about establishing an intelligence dashboard where fintechs, banks, everybody will have access to it. Now, my own question, which you're not answering yet, is did that ever materialize, or was it just like fine talk, like let's just sweet talk these journalists so that they go and write something, and it never materialized? But Kelechi, you're very interesting. You know why? Everybody's saying AI, you have to build something. But Kelechi is in charge of infrastructure. When they are like, we'll solve the problem, when your MD is saying we'll solve the problem, and you're the one that will solve the problem, Kelechi is that person. Kelechi, everybody has said AI. First, simple questions first. And this is even coming off of a recent IMF report. The IMF recently said, Africa, yeah, you guys are speaking about AI, but you don't even have lights. You don't even have lights. So where is this AI talk coming from? Kelechi, do you think we have that infrastructure to match all the talking that we've done today?
Okay. Good afternoon, everyone. IMF's view, I wouldn't say, I wouldn't blame them because they're seeing Nigeria from a certain perspective,
Yeah,
which we all understand that power is a common problem we have. But from an infrastructure point of view, and I'd like to, I don't know if anybody from CBN is here. I'd like to thank them because, like you said, they've passed 16 regulations in the last few months, and one of them is very beneficial to those of us in the data center space. And this is the second time this year I'll be answering this question. Are we ready from an infrastructure perspective? And the simple answer is yes. 5-10 years ago, the question was, could a data center be operated in Nigeria? Today, the question is, how ready are we for the future demand? And I don't want to use AI, but I have to say it, because we know that's where technology is tending towards. So that's what we in the data center space are preparing for, to ensure that when those AI workloads come here, when the physical infrastructure, the servers, the connectivity come here, we are able to provide infrastructure that will support that demand. But from an infrastructure perspective, I would say 100% we are ready. And I'll use Rack Center as an example. And I'm not trying to sell Rack Center, which is my organization, but it'd be good if everyone here comes and hosts their servers with us, more money for us. But we've operated for about, we started operations in 2013, and considering the power issues we've had, we've never for a single second had any downtime. So for the last 13 years, we've had power supply go to each and every one of our clients. And it's one of the bragging rights that we have. And even to our foreign clients, a good number of them have said we don't see this level of efficiency and consistency, and we've been able to provide that. And to the other players in the industry as well, they are also keeping up with this. So from an infrastructure perspective, yes, we are ready.
What's the most immediate problem that would happen, the immediate problem that would exist when players start shifting to local data centers? And I say this from, we all remember when banks were migrating, right? Yes. We all remember when banks were migrating their core banking infrastructure. Remember what happened, right? Okay, no, I don't know. It feels like a lot of people are still very, it wasn't stable, right? But like, yeah. So what's the most important thing? What's that one problem that will exist? If, say, I feel like I'm mentioning Paystack a lot. I'm sorry. But like, yeah, if say Paystack, for instance, the new CBN regulation on shifting a part of your payment data, localizing a part of your payment data, if say Paystack says, oh yeah, well, yeah, obviously we have to comply, what's the most immediate problem that Paystack will face in that migration?
Well, it will be more of, I would say, the level of compliance, because I know the regulation is there, and the race for every client now would be, oh, let's start localizing data. But having your data reside in Nigeria or Iraq Center or any of our competitors is just the first step. You might be processing here, but not replicating in Nigeria here. So it means you may not be able to fully comply. So in that race to host your data locally in a data center in Nigeria, you must also make sure you have that 360 view of your entire data lifecycle. Where is my data? Who can control it? Is there a third party who is outside the country who can control it? And then if you can answer that question, and then you're sure that you can fully integrate and migrate your data to one of the local data center facilities, you should be fine. But that would be the first concern for you guys.
I helped you with one thing, Paystack. I helped one thing, I tried. But like, Francis, one interesting thing is happening in Nigeria. Like, I think probably everybody has noticed too. The CBN is becoming pro-crypto. Or pro-stablecoin, maybe pro-stablecoin. In the recent PSV, payment system vision, the CBN mentioned stablecoins at least 68 times in the document. So quite interesting. I mean, considering that just a couple of years back, a CBN governor is like, cancel it, cannot happen. But now the CBN is trying to be a lot more compliance driven in how it thinks about stablecoin. But do you think they are thinking about it the right way? Or is it still are they still trying to regulate from being, how will I use the word, from defense? Or is it from attack?
All right, David, thanks a lot for that question. First of all, full disclosure, I participated in the PSV industry working group. So yeah, we're partly responsible for all the measures of stablecoins. All right. I think when it comes to regulation, the first thing I would say is consumers don't wait for regulation.
Yeah.
Nigeria, for the longest time that I can remember, has been one of the foremost countries in crypto adoption, stablecoin adoption. So consumers are not going to wait for regulation. Whether you put regulation out or you do not, whether it's good regulation, whether it's bad regulation, if there's some sort of incentives that are going to drive consumer behavior to benefit out of a product or a service, they will utilize it, right? So I think the thing now for regulators, and for me, I believe that there are sort of three ingredients that regulators need to critically focus on in bringing out regulation. The first thing is that regulation, first of all, needs to study consumer behavior, and it needs to protect consumers. I think that's the primary thing for regulation. You need to protect consumers. You need to know that if you decide to interact with crypto assets and interact with stable coins, just like the gentleman from the police said here, that someone, lost some money and they were able to recover it, we need to know that there's some sort of mechanism that can also enable consumers to, get that kind of value. And the second thing is for institutions and operators are, want to invest in the space, want to deploy capital. Regulations need to give them the confidence to be able to participate, right? There is, it's of no use when you have a regulatory framework out there and a couple of years down the line, you still have a number of actors who are operating outside of the perimeters of that regulatory framework. It doesn't help anyone. And the last thing is that regulations need to leave the room open for innovation, right? You've said a lot about Paystack. I'm still going to refer to them because I think that they have creatively known how to provide the best experience to your consumers, to your customers as well, and working within the perimeters of regulation. Now, that said, when it comes specifically to crypto, Nigeria hasn't done so badly, right? If you look at it from a regional balance, from a regional perspective, this was one of the first jurisdictions in Africa to put out any sort of regulations for crypto. And it's interesting because I think it's the regulations came out in 2023.
Yeah.
In 2021, there was a ban. There was an outright ban. But in 2023, we saw the virtual asset service provider regulation put forward by the SEC. Following from that, it was either 2022 or 2023. But anyway, following from that, we then had the ISA, the Investment Securities Act, that clearly recognizes and identifies virtual assets as a thing. So we have that. But now that we have the regulatory frameworks and we have all of this there, I think a couple of more things need to happen. One is we need to begin to look at implementation and scale, and we need to address if the regulations as currently laid out solves for all the problems that were there before it came out. And I'll speak specifically to, and this ties to the CBN, I'll speak specifically to digital assets as a broad category, and then you have stable coins on its own. For anyone who's watched globally and who's looking at global trends from the United States to Singapore and Hong Kong, it seems more and more jurisdictions are beginning to identify and delineate stable coins separately from digital assets. Say, okay, stable coins, this looks like some form of monetary instrument, right? and we need to begin to think critically of how we regulate this specific asset, this specific monetary instrument. And then you have you have other digital assets, virtual assets that can be regulated by the SEC and all of that. So you have that. I think the CBN has its work cut out. We saw recently the executive order that was put out. I think that's sort of like the first step in achieving that vests the authority in CBN in regulating virtual assets broadly. And I believe most of its focus would be on stable coins. That's on the one hand. Now, for the SEC, coming to implementation and scale, we have had a regulatory framework for a number of years now. We've only had a handful of crypto companies, virtual asset service providers that are in the regulatory sandbox. Recently, a couple of more others have been included. But if you compare it to markets like South Africa's regulations came out just about a year or two before ours, and now they have over 300 regulated crypto asset service providers. In terms of adoption, they are nowhere close to Nigeria, but they have way more regulated, regulatory approvals are being issued at a faster pace. And I think it's something we could look at because, like I said, regulations as it is need to give the confidence you need to know that as a player, you're serving consumers today. You want to know that when you put out some sort of application, you're getting a response for it in good time and all of that, and that just generally just helps. So yes, I already addressed it, tying to a question for the CBN, but it's not just the CBNs, and there are other regulators that are involved in this, and they have their work cut out for them.
Thank you so much, Francis. Samson. Yeah, Samson, simple question, very simple question. Paystack, what's the biggest misconception that regulators currently have about compliance in fintechs? What's the biggest misconception? Then also, what's the biggest shift that you've seen, insights? I don't think anybody's reported here, but biggest insight shifts that you've seen from an insider on the fraud watch. What's happening? The NIBS, the person from NIBS was discussing about how, was it NIBS or the police? I'm forgetting, about how it's not becoming very specific. They know what they want, and with AI, it's very fast now. You can easily just replicate an attack. What are you saying from NIBS? And a final one, sorry. Fintechs are becoming MFBs. Are they ready for that compliance burden? Final one.
Yeah, I think I'll take the third one first. So, to be very, very clear, right, they are separate entities, right? I need to start there because I think there's a perception, and I understand the perception, but the payments company is not the MFB.
Yeah.
Those are two separate companies that have their own governance structures, and they are regulated by the same regulator, but not the same department, right? Which means that the structures and the things that they need to adhere to are very different. So I'll just start by saying that. Obviously, I think the version of your question that I will answer, though, is starting out as a payments company and then now setting up, an MFB.
Yeah.
What was the question about that MFB part again? Is it what do I think about it, or?
No, are they ready? For the
are they
compliance
ready?
burden?
Exactly. So I think I can answer a version of that question. So essentially, coming from a payments company where, primarily you are supporting your B2B, almost exclusively, right? We're enabling businesses to receive payments from their customers, moving into a space where, in fact, you are mandated to deal with end users. You have to deal with customers and to deal with consumers. It definitely opens up a whole different opens you up to a whole different level of risk, and obviously changes things operationally as well, because I think we're able to operate on a lean team when you are only supporting businesses, but when you need to support individuals, you need to support customers, obviously that changes things significantly. But from the compliance perspective, I think many companies who started out as payment companies and then went on to perhaps maybe acquire an MFB or set up a new one. I think many people don't really know what they're getting themselves into. I think after the recent set of license revocations that happened, I think it will force a number of people to sit up and to, really, think deeply about this whole MFB route that they've gone. So, yeah, that's my 2 cents on it. I think, many companies are in over their heads trying to, dabble into operating a bank, a literal bank. The second question about signals or insights, I would just refer to something from the report, right? Because I had the privilege of also contributing. Aside all the things that the gentleman from NIBS and all the other speakers have touched on, social engineering, SIM swap fraud. I think there's this very concerning trend that we've noticed, and it's of particular concern because it also poses a national security risk to Nigeria. And it's the trend of corporate mules, right? So you're familiar with mules being, individuals, on the street. They call them as a man, as I hear. It's just someone who helps you to collect the money and move it onward. But now we have people setting up entire companies, with the sole intent of just, receiving money. And so you find some of them either recruiting minors or, people who are, fairly young, in their early 20s to be directors of companies. They go that far, essentially. And I think the part of it that's very concerning is that there's also some foreign nationals who have interests in a lot of these operations. So we have, crime syndicates from across the world, as far as Southeast Asia goes, who, obviously have some level of operation or footprint within the country, but, you can't tie them to the operations. But, if you look deeper, if you dig far enough, you find that there's some foreign national somewhere who, has recruited in Nigeria to be the face of the company. And those companies are then used to launder, proceeds of all kinds of crimes, right? Fraud being obviously the biggest one. I think there's a system called flying money. I don't know if anyone's familiar with it, but it's this system where a counterparty, so essentially if I wanted to send money to Kenya, for example, I find someone here in Nigeria, I send him my 100,000 naira, he calls his brother in Kenya, and then his brother in Kenya releases Kenyan shillings to the person I wanted to send money to. What that essentially means is the money that I sent to the person in Nigeria never leaves Nigeria, but it has gotten to Kenya at the same time. And so what ends up happening is there are a lot of people who set up companies within the country solely for that purpose. So they receive money from someone here locally, but somebody else somewhere else releases an equivalent amount of money halfway across the world. And so essentially the money crosses borders without ever actually leaving the country. So, and if you find the person who received the money, if you ask him, he says he did business with someone, in another country, but, in actual fact, his company was set up entirely for the purpose of just receiving proceeds, and, they find a way to balance their books later. With that part is still quite unclear how they eventually, square up. But I suspect that, like my colleague from at Utila, right? I think there's some stable coins obviously involved in balancing the books there. Your first question was about
compliance. What do regulators get wrong about compliance in fintechs?
Okay, so I think many times, and this goes beyond just like our regulators, many times we are painted with the same brush that the banks are painted with, right? I think where they try to hold us to similar standards, maybe not the same standards. Meanwhile, our operations are significantly different. So we talked about like a bank branch. You can walk in. I think someone asked a question about checks. I don't know. Was that okay? Maybe I'm mixing that up. But basically, you could walk into a bank. You could sign up your account. You could. Okay, it was about the tallies. Sorry, not about the checks. I was remembering what EIJ was saying earlier. Essentially, banks have physical operations. They have physical locations. Whereas, like with fintechs, like we run much smaller teams. In fact, if I had to ask everybody here how many people they think work at Paystack, you will probably be wrong. I'm fairly certain everybody will be wrong. But it then just paints the picture that like a lot of times we're being painted with the same brush that they've painted the banks with. Meanwhile, our operations are significantly different. And as I said, the number of people who are charged with that responsibility of like, maintaining compliance is also significantly different. The size of the team, a lot of things are very, very different, right? And so what I find, probably maybe just a random example of something that I think they hold us to. Everybody assumes that every client has an account officer, right? This is just an example of something that they try to enforce and say, okay, so you have 5,000 merchants in Nigeria. Can you bring me the account officer for this merchant? And I say, I don't know if anyone on the panel is familiar with what I'm describing, but it's something that can be quite it's difficult to explain, right? Because as I said, what everyone is used to is banks, and banks have been the model of what financial institutions look like. So, I'll just basically leave it at that. That the banks have been the standard, and dealing with fintechs, I think I don't want to say that we're being treated unfairly, but we're being held to standards that I don't think that we sometimes are even able to keep up to. But I think like we've said today, AI is the solution to everything, right? Yeah. Yeah.
Gbemi, sorry, hi Gbemi, yeah, sorry. Something you said, I just wanted to ask you, based off what you said, about compliance, like thinking of fintechs as banks when it comes to compliance. What needs to change if that's, how do you tailor make compliance for fast, agile fintechs versus traditional banks?
Thank you for that question. Hello? Where are all the mics? Okay, it's back. It's back. Okay, so it goes back to, so I'll paint a scenario now. You have the bank, then permits me to use Paystack. Paystack, the fintech company. The nature and the scope of how a bank operates is different from the nature and scope of which Paystack operates. So first things first is, and this is me now playing it down to a trying to bring in compliance into the particular industry we're talking about. A bank, yes, they have some regulatory bodies that are on them that they have to do because they deal with payments, they deal with personal details, the way they transact, the different branches that they have, the physical office that they have. So there are a lot of requirements that is involved in the scope of a bank compared to a fintech where most of their data is in the cloud. So yes, those regulations are applicable to them, but the scoping is different. And that's that when we are relating to them, we understand their infrastructure, and it's based on your infrastructure that we now tell you, okay, this is the particular standard that is applicable to your business. So it still comes down to, yes, you have standards that you have to adhere to because you're a business that is holding information, payment information, you're holding clients information, and then you also are not just locally bound but international. And for you to do those business and get the trust of both your clients locally and internationally, you have to comply to the standards. But where the difference is when we are scoping. The scope used for a bank is different from the scope used for a fintech.
Thank you so much, Mimi. Now, I think we've come to the end because of time, but I'm going to ask each of us like one final question. I'll start with Mimi. If we were to have this, if we're going to have this conversation in 2028, what should we be talking about? Don't worry, it's a different question for everybody because I said everybody will sit down like it might not be the same question, but like here.
In 2028, what we'll be talking about, I think the threat landscape will be different. So that's going to be like the major discussion we'll be having. And it's possible that we'll move away from the AI mandates that we're having now to a far more deepened threat that we'll be having in the future. And then it's now us addressing that threat and also finding the solution that can measure it or control the threats that we'll be talking about.
Thank you so much. Samson.
Yeah.
It's an AI war. It's an AI race out here. How will we win?
How do we win? Who's we now?
Eh?
Who's we? Like
all of us.
I think my first comment on this would be there's no way out except through, right? So adopt it, right? If the offense is already using it, the best thing for you to do is just get involved. I say this as someone who was a bit of a skeptic in the earlier years. When I say earlier years, you would think I was talking like 10, 20 years ago, but just 2022 to now, right? So the first couple years, I was like, yeah, I don't know about this thing, man. I'm just going to observe from the sidelines. But very quickly, I saw that it wasn't even an option. Aside the fact that obviously I work within a tech company, I also realized that even for work, like just for the sheer amount of work that you need to get done, the volume of threats you need to comb through, you absolutely need to adopt it. So I would say the only way out, or the only way we win, is by playing the game. So for every single person here, if you don't already use AI, if you're not already an adopter, I would strongly encourage you to find ways to leverage it, because that's the only way that you win, by playing.
Thank you so much, Samson. Mr. Umokoro, I hope I'm getting it right. I really hope I'm getting it right. Yes, am I getting it right?
You can just call me. You can just call me Moody.
Okay, Moody.
Yeah.
Okay, Moody. Okay, now I'll try with that. Is there ever going to be a world where we get KYC right? Is there going to be a perfect world for KYC? And if we ever go to a world where KYC is perfected, will fraud stop?
Okay, so it's an interesting question, and it's one worth thinking through, to be honest, because I do believe that there's a world where KYC becomes just sorted out from a point of view of there are a lot of things that need to come together, right? There's a conversation about proper national identity systems that are structured and in place, data capture, securely stored, and then properly integrated into the entire fabric of our existence. As you are born, as you go to school, as you start working, you travel, separate databases capturing different pieces of our existence, and then synchronized, and they work, right? In such a world, yes, KYC is pretty much sorted. But will fraud stop? Then that is now the question we need to think through carefully, because while I don't think there are problems without solutions, right? So there is a solution to fraud. The question is, what are all the different things that need to happen between where we are now and that world where fraud has ended? Like I say, there is no, I don't want to say there is no solution to fraud, because I think I see just looking at developed countries, you look at Scandinavian countries, Netherlands, some of those countries, you hear, right, about how literally rehabilitation of individuals actually works, right? You take people through a correctional system and their mindset changes, right? They come out and then you see how they talk about the statistics and how, the rate of crime actually dips, right? So fundamentally, it only ends when the psyche of individuals has totally crossed over. The majority of individuals crossed over to one where everybody's just trying to add value, generally. You have people trying to perpetrate fraud because they're trying to, get value out of where they didn't put, value into. But if you're able to conceptually change the thinking of people to the point where they are genuinely just, I just want to add value to this system, then it works. But in between where we are and that world, there's a lot of things that could happen come to place, and one of which is just, KYC assurance.
Thank you. Thank you so much for that. Francis, yeah, stablecoin. So much excitement. Is it a bubble? One. Two, as we continue to regulate decentralized finance, does it then lose its edge? Because it all started as decentralized. Do we then bring it to centralized eventually?
Okay, starting with the first question, I'll just respond, no, it's not a bubble. It's certainly not a bubble. We've had different forms of money over time. There's a time when I wasn't alive then, they used cowries. There was, trade by barter. Then there you have cash, which is like the longest running form of money, of exchange. And now you have stable coins, right? Of all those forms, stable coins happen to be the only one that gives you an immutable trail. An audit trail. You're able to tell where specific stablecoin assets, crypto assets, have been per time and what have they been involved in. And in fact, it also ties to a separate question you asked where you were talking about KYC and KYB. There's a new dimension which compliance companies like I believe Smart Comply is also going to solve for, and we're even going to begin to see regulators push for, which is know your transaction as well. You need to not just look at the customer and look at what the institutions are doing. You also need to know this specific, crypto asset that is coming into your wallet. Where has it been? What has it been involved in? Should I accept this deposit or not? Right? These are some of the things we're going to begin to see. Stablecoins are not a bubble. You are able to do that you're not able to do this with cash. I don't see cash now and I'm not able to tell where it's been. So that's, in a sense, sort of solves that headache, as you said. Then you begin to look at some of the benefits as they are, and you begin to look at what's happening because we don't live in isolation. You begin to see what's happening globally. Like I said, consumers don't wait for regulation. Whether or not you regulate it, consumers are going to keep on using it. So the question then becomes, do I want to sit on the fence? Do I want to ban this and all of that? And we still keep on revisiting the question every now and then. It's already been regulated in other jurisdictions. The United States has a Genius Act, which I believe has been one of the more celebrated regulatory frameworks we've seen in financial services recently. Singapore, Hong Kong, they have something similar. Europe, it's doing its own thing. I understand the UK is going to be releasing something very, very soon. So we don't live in isolation, and something we're going to have to do. Some of the biggest heavyweights we see globally in fintech, in tech and all that are also investing deeply into it. And the reason simply is because it's smart money, right? That's what I say. I already highlighted the instance of its immutability. That's not the only quality. But yeah, I believe if this sort of panel is conveyed in 2 or 3 years, it's going to be cool. It's the talk around it is even going to be way more intense than we have it now, because it's now going to become very apparent how this sort of plugs in a lot of gaps, as you see with the inefficiencies in a typical monetary system, and how do you then effectively get organizations to comply to standards and protect customers. Yeah.
Thank you. Thank you so much. Kelechi, final panelist. So, everybody's talking about data sovereignty. Do you think we're jumping the gun? considering where we are?
Okay. I think we're already on that journey. Where we are today is the data residence or localization. And for that to be fully effective, I think there are about 4 critical aspects I say must exist. The first, which is the background, or would I say the foundation, would be the critical infrastructure, which is where we play, where you're talking about power, you're talking about connectivity, you're talking about data centers. And typically data centers is that hub where power and connectivity and the clients come together. Another critical aspect would be, I think somebody mentioned it, manpower, right? Skill set. We need that for the growing demand to ensure that we have people who will be here to support the infrastructure, to secure our infrastructure, and also to help with regulation as well. The third factor would be the market space. And Bemisola, I want to say big kudos to you and your team. When we see companies like Smart Comply, it gives us, from an infrastructure point, joy in the sense that if we build the data centers, clients may not have that confidence to come here if there's no local market space. So when companies like all of us here are able to play and provide services that would naturally would have taken outside the country, yes, that market space begins to grow. And if it becomes viable, you would see that even the international players begin to come in. And I like to use Amazon as an example. They are the first hyperscaler who have come into Nigeria. So it means they're hosting locally, and it means those who have services running on Amazon can now move to Nigeria as a local zone and comply. And then I think the 4th critical aspect would be regulation, right? And regulation is what would drive us to sovereignty, where we would have governance and jurisdiction over our data, both locally and internationally. And that requires policies and our regulators, NCC, CBN, NIDA, Nigerian Data Protection Commission, and they are doing a good job, but there's always room for improvement. Once these aspects are there, then we now begin to move towards the future. We now go from data localization to data sovereignty, and in 2-3 years, we should now be talking about data resilience, meaning that now we've brought the data here, now that we have governance frameworks, how secure, how reliable is our data now? In the event of an incident, can we recover? And that's why the likes of Microsoft, in quotes, or Google have what we call trust. Every day I wake up, I flip my laptop open, I'm almost 100% certain that Outlook is working. And even when there's a downtime, you know that there's an alternative or redundancy, or in the shortest possible time, they can recover. And that's what we are looking forward to in the next few years. Once that resilience is there, then this localization, what I call stress test that's coming towards us, we can put it to the test to see from an infrastructure level, we can respond to incidents and ensure that we provide that trust for our clients to ensure that whenever, even if there is a downtime, we're able to support them to recover in the fastest possible time. That their connectivity, redundancies, and all of that. So that's where we are heading to. So yes, it's not a myth. We are on that journey, and hopefully in the next 2 to 3 years, we should get there. Data resilience.
Thank you very much, everyone. A round of applause to my wonderful panelists. Thank you.
Thank you so much. Yes, very rich conversation. We've shot much more than the time we thought we'd use, but I can see that everybody was engaged, and there are things to take home to ponder about, and let's see how we build this country going forward, most especially with the use of all of these that we've talked about to reduce fraud, amongst other things. At this time, I want to call on Efe Owonigo, Senior Vice President Operations, Smart Company, to please come and give us the closing remarks / vote of thanks. Please, let's celebrate her as she comes, please. I did not pronounce it well.
All right, thank you very much. Good afternoon, everyone. Thank you for being with us since morning till now. Really appreciate your presence. So as we bring the Adhere Compliance Frontline Forum 2026 to a close, we want to sincerely appreciate every single person, from our distinguished speakers to our panelists, to partners and attendees, for making today a remarkable success. You know, from exploring the realities of financial crime and regulatory expectations, to unpacking Adhere and examining the future of AI-driven compliance. One thing that today's conversation have really enforced or reinforced in our minds is the fact that trust is the foundation of a resilient financial system. So we hope that the insights that we've shared today, the insightful conversations, will be able to inspire stronger collaboration across teams. It will inspire innovation and actions as we collectively shape the future of compliance. So we thank you very much for being a part of the Trust Frontier, and we really look forward to continuing this journey with you. So thank you very much for being with us. Thank you for your patience, and we wish everyone safe travels and enjoy the rest of your day. Thank you.